really humbling. Just as one stupid thing, I'm using a lot less paper than I did before this pandemic. There's serious things that are out there, and I would suggest the major constraint now, as it's been for decades, is the child care in this nation. It's a major constraint. Jamie Dimon's talked about it at JP Morgan. I'm sure James Gorman has at Morgan Stanley as well. How do we get to a child care program that mimics selected other developed nations?
Well, I'll tell you, many corporations, including my own, have created programs for working parents so that they will have places to keep their kids, or they'll have people that are available in emergencies. And I frankly think on the other side of COVID-19, you're going to see more and more companies think about a way that they can be innovative around child care. So you bring up a very good point, Tom.
Carla Harris, from where I'm sitting, which is not in the U.S., it's really quite, difficult to see a United States that's so divided ahead of the election on all sorts of fronts. What's the prescription for going forward?
Well, I am certainly a glass half full kind of girl, as you know, and I do believe that on the other side of this global pandemic, we will find a way to come together. I think that's one of the reasons, frankly, if you really want to get spiritual about it, this has descended upon us to really make us focus on the fact that we're all interdependent and we all need each other at the end of the day. And this is the first time in my lifetime, and probably in yours, that this has been a common experience. And I'm hopeful that because it's been a common experience, we will come together and find a common solution. And you're right, it's hurtful to see the divide, but I think, on the other side of this, we'll find a way to get together.
How will it reshape Wall Street? How will it reshape how we work from home or not? What do you see as the lasting legacy of COVID-19?
I think every company will have to rethink its real estate portfolio, how they work, how efficient people can be with the right kind of technology. I think companies are seeing that for the first time. So I think every company across every industry is sort of rethinking, what do we need to look like? What's our optimal size? How can we enable people to be even more productive and, more importantly, more innovative if they're not in the same space? And the big question is, how do you create and drive culture when you aren't under the same roof? That's the big question.
So, Carla, what's the question you get the most by clients of Morgan Stanley? What do they want to know about what kind of economy we're building, what kind of social cohesion will be post-2020?
Well, the biggest question that I've gotten, especially as a public speaker, is how do you lead when you're not in the same space? How do you drive productivity? How do you keep people comfortable and focused and really driving in the same direction and maximize your productivity? And frankly, what I've been saying to leaders, especially when we went into this shelter-in-place protocol, there's 3 things that you must do. Number 1, you must be visible. Number 2, you must be transparent about what you know and what you don't know, and more importantly, when you know it. And number 3, you must be empathetic. And that will allow you to create some stability and some certainty when people are craving stability and certainty and you're not in the same place. And if you are authentic, which is number 1, then they are apt to follow you into this uncertain environment.
But the pandemic will also hurt women more than men. It will hurt, BAME people more than whites. How do we address this? How do we rebalance this?
Well, I have to tell you, I am not of the mind that it necessarily will put people at a disadvantage, women and people of color, because this is the first time in many ways that there's a level playing field. It used to be if you're in the same place, maybe someone shared, they went to the same school or they golfed together, and you might have been intimidated by approaching a leader because you saw them talking to someone else and you said, well, I don't share playing golf, or I don't share having gone to that school. But now, everybody has to communicate in this way. So there is a level playing field. And so now it's really about your own initiative to reach out to someone and say, hey, Tom, I wanted to have a conversation with you pre-COVID. Can you give me 10 minutes on a Zoom? I'd like to walk through 3 or 4 things with you and talk about my career. So now you can be very focused, very intentional, and you can connect in the same way that everyone else is connecting. So I actually think this has created a bit of a level playing field, but your initiative must drive the connection, no question.
The ever-optimist Carla Harris, thank you so much for joining us today, Morgan Stanley Vice Chair and Senior Client Advisor. Now, later tonight, also catch David Rubenstein's conversation with the Progressive Chief Executive, Tricia Griffith. That's at 9 p.m. in New York, right here on Bloomberg TV. This is Bloomberg.
you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Live coverage of the Vice Presidential Debate. That starts on Wednesday night at 8:30 p.m. Eastern Time on Bloomberg Television and Radio.
This is Bloomberg Surveillance, Tom and Francine from London and New York. Now to an exclusive conversation with the L'Oréal Chief Executive, Jean-Paul Agon, saying that the market for beauty products has stayed resilient during the pandemic. Well, he sat down with me virtually for a discussion on Leaders with Lacroix.
During even this year, the market is getting better. I think that the second half will be much better than the first one. The first one was especially hurt by the lockdowns everywhere in the world. In fact, there was still an appetite for beauty, but consumers were not able to shop the products. So now that stores have been reopened almost everywhere in the world, I think the H2 will be much better. And I'm very confident for the market for next year and the years to come. I mean, there is absolutely no change in the appetite for beauty of consumers all over the world.
So you don't think people will buy less lipstick because, frankly, we're wearing a mask, we don't go out as much. So actually, maybe some of our tastes can change over time.
No, I don't think so. On the contrary, I think that there is a frustration today by women not being able to use cosmetic or makeup, exactly like there was a big frustration during the period when you couldn't go to hairdressers. And what we saw right after the reopening of salon is that there was a rush to go to the hairdressers and that everybody was very happy to go back. So I think the same will happen with makeup, even with lipstick. And I think that when the COVID will be gone, this will be the lipstick failure. I mean, a great time for lipstick and makeup.
Okay, how long would that be? Is it mid-2021? Could it be actually longer that we go into this lipstick failure, as you call it?
You know, I have no information about vaccines or treatments, but I'm pretty sure that when this crisis will be behind us, and this will happen, you know, it won't be like that forever. The makeup market will be back, but even you know, if the makeup market is not that good today, I mean, other markets are really good. There is always a kind of compensation effect in the beauty market, and for example, right now the skincare market is pretty dynamic. Hair care is good, solid. Hair color has been dynamic too. So all in all, the beauty market is very resilient.
Do we shop differently? So are you going to have more of a push of online, and how much has that increased compared to pre-pandemic levels?
Yeah, that's for sure. I mean, the real fundamental change of the market is in the way to shop. Before the pandemic, e-commerce was, for example, for us already growing fast, plus 50%, but it was at 15-20%. It grew very quickly during the crisis, and now we are at 30%. So there has been a complete change of behavior during the crisis, and I think that this change will stay. How
much of your sales are you expecting to actually do online in 3-4 years from now?
You know, we're going to be very soon at 30%. Maybe one day, you know, in before the next 10 years, it's going to be 50%. It's possible.
That was Chief Executive of L'Oréal, soon on Leaders with Lacroix. Big breaking news out of the EU. The EU will ignore this October 15th Brexit deadline, betting that the UK will come back soon. Now, remember, this was a self-imposed deadline from the UK. It means that maybe the EU is more optimistic about a deal longer term. This is Bloomberg.
everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
People don't like the fact that they don't know what their next 3-6 months are going to be like.
There could be a dip, but people want to come in and buy that dip.
There has to be more fiscal stimulus. The markets are expecting it.
There's a real risk that consumer spending could be negative in Q4.
Markets are going to force the government to act here.
Governments have control of this, not central banks.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow with equity futures down 7 points, negative 0.2%. Tom Keene, the president, checking out of Walter Reed, checking in to the White House.
And Caitlin Collins at CNN saying he wanted to reshoot the entryway into the White House. He wasn't happy with the way it was filmed to redo it. I guess it's theater, John. And the most stunning comment to me, which I'm sure will be in the news, he goes, maybe I'm immune. John, I have no idea what that means.
You're not alone, so let's move from the theatre of the last 24 hours to the drama of the polls this morning. Two numbers, Tom. 57, that's your first number. 41, that's your second. The former VP Joe Biden with a widening lead in this CNN poll this morning, Tom. It's not a predictor of what will happen in 4 weeks' time, but it's a snapshot of the mood of this country. And, Tom, it straddles that COVID test that was positive. The dates for this poll, October 1st to October 4th, an important poll this morning.
Well, gyrating into the markets as well. I'm going to call it important. I rarely read polls, folks, and I read every word of the CNN SRSS polling. 1,205 adults, 3.6% margin error. And, John, what's in there are the subsets. I'm not going to go into them now, but the subsets on COVID, on the economy, and the rest of the poll. And that gap, as they say in the text, is widening from the NBC Wall Street Journal poll of just a few days ago.
Looking forward to catching up with Kevin Cerulli. Got to talk about this bond market as well, Tom.
Yes.
It awakened in the last day or so. Yields this morning a little bit lower, but the 10-year 0.76%. Finally, the snoozer is over in the Treasury market. Some economic data
out of control.
A little bit later. Lisa Abramowitz. There's only one of us that's out of control, Lisa.
Yeah.
Don't worry about it. It's not the bond market.
Woo, look
it's
at those
this guy.
yields
Go to cash.
that are still 1.5% for 30 years. We are going to be checking out the data. I'm going to take you on a time travel back, 12 months ago when we cared about trade and the trade deal with China. 8:30 a.m. We're going to get the U.S. August trade balance, and what you can see is a growing gap with the expected imports and exports to China, the trade deficit deepening for the U.S. with China as the pandemic has gone on, China being very far away from their targets. We may get a new read on that today at 8:30 with those figures. 10:40 a.m., Jay Powell will be speaking at the National Association of Business Economics. Very interesting, John, to your point. This is really the key issue. What more are they willing to do, and at what point will they come in with additional support if markets, say, have a further disruption? What's that trigger point? On that point, also 11:30 a.m., ECB Chief Economist Philip Lane is expected to speak at the same event to give a sense of the European aspect. And John, we're seeing that worsening virus case. We've heard from Christine Lagarde. They are willing to do more. They're preparing to do more. What that means could mean even more negative rates. Although, again, what are the trigger points? So much uncertainty with respect to further easing. We do have more certainty, though. They don't plan on tightening anytime soon.
Well, the language from the ECB president this morning in an interview with the Wall Street Journal could mean absolutely anything. Tom, here's a quote. "We stand ready to address the situation as it develops and to calibrate and recalibrate what should be calibrated or recalibrated as needed." Have you got that, Tom?
I'm calibrating to recalibrate. John, look, our heads are spinning here as we take unorthodox economics, fold them into what the actual bid and ask of the market is telling us, and all those nuances into this political moment. I think the goal is just to survive to October 16th. Will we see that debate, just as one idea that's percolating this morning, the beginning to really discuss, okay, what are we going to do on October 15th with the debate?
A debate with the VPs before we get there, Tom. Let's get to the price action as we count you down to the opening bow this Tuesday morning, shaping up as follows in the United States. For equity futures on the S&P 500, slightly negative after a nice day of gains, down 0.2%, off by 6 points. In foreign exchange, euro dollar 117.80 on the euro side. You will hear from Christine Lagarde a little bit later, and as Lisa points out, you will hear from Chairman Powell on the dollar side a little bit later this morning as well. But it's the bond market that gets your attention to kick off the trading week.
No question.
We break out. Yields higher on Monday, yields just a little bit lower on Tuesday, but it's the Monday price action that I think everyone is still reacting to. And waking up after sleeping for the last 4 months or so, Peter Cheer, Academy Securities Head of Macro Strategy. Peter, I know you've been paying attention, don't worry. I'm just joking. Let's start with this bond market and treasuries in the action of the last 24 hours. Peter, in your view, was it the data, the ISM, better, upside surprise? Was it the president's health, seemingly, according to his doctors, on the road to recovery? Or was it the polls, and the polls this morning as well?
I think the polls are certainly helping because they're pushing us towards stimulus. And I think the reality is no matter who wins, we are going to see stimulus. We're going to see more quote-unquote Band-Aid stimulus like we're seeing where they're trying to make people whole. But the market's starting to price in that we're going to see infrastructure stimulus. We're going to see real spending. That is going to drop a lot more bonds into the bond market. It's already been having some trouble digesting bonds for the past month in the Treasury market. So I think you see the 10-year go to at least 1%, maybe 1.25%.
I'm looking, Peter, at the failure of 2 yield rallies since March. In the land of point and figure, it's called a double pole high top. It's really an ugly thing. We go up in yield and then we go down. And then we go up in yield and we go down again. What does that signal to you?
I think that we've kind of hit the limits of where we can get into terms of lower yields, so that's another reason higher yields. Also, when we had that stock market volatility recently and we were down on stocks, treasuries barely budged. Yet another negative sign that it's not going to take much to push yields higher. And then finally, I know the MOVE index, which is an index that really looks at implied volatility in the treasury market. I know it's a little bit wonky, but it's been very, very low, telling me that people haven't been hedging any sort of interest rate risk. So again, another reason I think we're susceptible to a fairly rapid move to 1 to 1.25% on the 10-year.
Peter, that sounds like a lot given the stasis we've seen in the bond market recently. Will that get the Fed's attention?
I don't think so. I think above 1% they start paying attention, and then they maybe start doing things to ensure that we don't get above 1.25. But I do think if you look at the Fed's messaging for the past month or two, they would not be unhappy to see slightly higher yields and a steeper curve, right? I think the Fed has done a much, much better job than the ECB trying to ensure that banks can make some money, right? We are not going to negative yields. I hate negative yields. I think they're the worst thing possible for the economy. So we're not going to get negative yields. I think the Fed actually wants to see a steeper yield curve. And bizarrely enough, it gets very, very circular, but they talk about inflation expectations. That's a calculation from that anyway, so it suits their agenda.
Well, Peter, tell that to the Cleveland Fed. Loretta Mester out yesterday saying, quote, I can imagine wanting to shift to longer-term treasuries as we did during the Great Recession. How do you frame that one?
I think they're going to be very careful not to let it get above 1.25%. So as we start seeing higher yields or moderately higher yields, I think first the Fed will step up buying more treasuries. Then we'll go back hearing a little bit more about yield curve control. And I think we are stuck in this world. We potentially see real negative yields in the U.S., very negative. And that's one reason I remain bearish on the dollar is any inflation which would normally express itself in higher yields is going to be tamped down by the Fed. And that money is going to have to find itself somewhere else. So it's going to express itself in dollar weakness. So inflation is going to be dollar weakness, not higher yields because of the Fed.
Does it matter to you, Peter, as a market guy, that the economists are partitioning inflation among goods and services? Goods, inflation, maybe. Service sector looks like substantial disinflation. Does that stuff matter to you?
It does a little bit, but I think over the long term, we will see an equalization. I do think if we get this infrastructure spending for the first time in a long, long time, we might see some real competition to hire mid-level type employees, people who can manage plants, people who can manage production facilities, and that could actually create wage inflation, which has been really lacking for the last 10 years.
So given the fact that you do think that bonds will sell off, do you think that it is inconsistent for equities to continue to rally in tandem, or do you think that they will continue their rush upward based on this extra support fiscally as well as an improving economy with the end of the pandemic?
You know, one thing I'll say, and it's probably going to sound crazy, but I actually like dividend stocks. And dividend stocks would normally do poorly as yields are rising, but dividend stocks did not respond at all for the past 2 months to low yields. So I think you're going to see a little bit of a normalization, almost what I'm calling a reversal trade. I would have called it a reopening trade a couple months ago, but we've moved so far beyond that. I think it's a reversal trade. I do think big tech is particularly susceptible. Depending on who wins, they may be a target for paying a lot of the bills. So I'd be a little bit more nervous there. I continue to like the performance that we've seen in reopening. I really like the fact that the Russell 2000's been doing well of late. So I think we could see a real strong, smaller company, domestic-focused rally for the next 2 months as the spending comes
Peter,
online.
let's separate these issues out because we're starting to conflate two different issues, I think. There are events that squeeze positions and there are events that drive durable change. Now, the thing that people are worried about going into November is that we don't have a result. The thing that squeezes positions is that we do have one. That's the somebody. The who, that is what drives durable change. Now, if somebody wins, i.e. Biden, you get a Democratic sweep, that will squeeze positions. I would argue the other side as well. If you've got a red wave, that would squeeze positions too. But what drives durable change is, that's the person, the policy. Are we conflating the two issues at the moment?
I think a little bit, but I think when you really look beyond the messaging, what's going to be most important to me is, will we get fiscal stimulus? Will we get infrastructure spending? Will we try and rebuild the manufacturing base? And to me, the messaging from both sides is actually very similar. So if I think about what's going to be the most important next year is, do we drive fiscal stimulus? I think the answer is yes, regardless of who wins. How we pay for it might shift a little bit, but that's kind of why I'm very optimistic. And I suspect that at the end of 2021, we will have a better job situation in the U.S. than we had at the start of 2020.
Peter Cheer, great to catch up, sir. As always, Peter Cheer, Academy Securities Head of Macro Strategy. Tom, this is the conversation of the moment on Wall Street. In the last 24 hours, people lining up to say we're beginning to price a Biden administration, at least relative to where we were last week. Then you ask them about the prospect of higher taxes. They say, we think that gets watered down. And my response is that a guess? Is that an educated guess? Or is that a real piece of analysis? And right now, Tom, it just feels like a guess. I don't think you know until we approach the new year, because you don't know what the policy priorities are until we approach the new year. You can go through all this long list of things. Those things often don't happen anyway. What's the number one priority? I don't think you get your hands around that for quite a while. And you'll remember, Tom, the morning of the last election, that acceptance speech by President Donald Trump, he mentioned infrastructure. That market off to the races. Equities turned around, and that's how it went. And I just wonder what that speech sounds like, whoever makes it in the coming weeks.
Well, we'll see. What I would say, John, is the landscape's changed in the last 48 hours with the president's illness, with his movement to the White House this morning, and also the relative quiet of Vice President Biden. We haven't heard much policy. It's a policyless dash, John.
We'll focus on the policy a little bit later with Florida Congressman Michael Waltz from New York and London. Good morning to you all. This is Bloomberg Surveillance.
With the First Word News, I'm Ruchika Gupta. President Trump and his allies look to capitalize on his release from the hospital. They're painting his return to the White House as a metaphor for his strength a month before the election. Meanwhile, the president is pointing to his own experience to implore Americans not to fear the coronavirus. A new CNN poll shows Joe Biden's lead over President Trump has expanded. 57% of the likely voters surveyed back Biden. 41% back the president. The CNN poll was conducted entirely after last Tuesday's debate and mostly after the president's coronavirus infection was made public. The European Union is ready to call Boris Johnson's bluff. Bloomberg has learned that the EU has no plans to offer concessions to the British Prime Minister before next week's Brexit deadline. It's betting Johnson won't make good on threats to walk away from trade talks if he doesn't get what he wants. And a House panel led by Democrats is seeking the breakup of tech giants such as Amazon and Apple. That's according to a critique of the recommendations by a Republican member of the panel, Ken Buck. The lawmakers are said to want to ban big tech companies from both owning marketplaces and selling their own products on them. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
What would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
Don't let it dominate. Don't let it take over your lives. Don't let that happen. We're the greatest country in the world. We're going back. We're going back to work. We're going to be out front.
The President of the United States in the last 24 hours. From London and New York, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 2 hours at about 12 minutes away from the opening bell. Your price action shaping up as follows this Tuesday morning. Equity futures still negative. Off the low, still down 6 points on the S&P 500, off by 0.2%. Euro dollar unchanged, 117.83. We did mention a little bit earlier, Chairman Powell later, along with ECB President Christine Lagarde at another event. And in the bond market, story of the week already, we have a breakout in Treasury yields. The president's health, according to his doctors, on track, still not out of the woods, but cautiously saying that we're on the road to recovery. The economic data, the ISM services read, Monday better, and we could avoid the political calamity of November 4th and avoid maybe not having a winner that day. That's helping markets out as well in the past week or so. So risk appetite improving to start the week, just diminishing a little bit this Tuesday, Tom.
Yeah, no question about it. I like, John, how you mentioned there also that the polling maybe indicates we won't get that drag from the first Tuesday of November into December, and as some of the gloomy people suggest, into January as well. He is in Salt Lake City, our chief Washington correspondent, Kevin Cirilli, tomorrow night. The vice president's debate, of course, more important, with one age 74 and ill and another age 77. Kevin Cirilli joins us right now. Kevin, the polling that's come out, the NBC poll and now the CNN SRSS poll, how does that change things for the Biden campaign? How do they adapt to the good news?
Well, there's no question that Democratic presidential nominee Joe Biden has the clear advantage amongst the polls, not just at the national level, now at double digits, according to the CNN poll as well as NBC poll that have come out within the last 48 hours, but also in battleground states, in Pennsylvania, in Wisconsin, where local affiliate polls have him also up by 8 percentage points at least. A campaign is a political chess match, but with right now the president recovering from COVID-19, albeit at the White House, those chess pieces are off the board. No more campaign rallies, no more ability to meet one-on-one with donors, and all of that adds to an increased amount of pressure for Vice President Mike Pence here in Salt Lake City. The Trump campaign needs a major shift in terms of the dynamics of this race, and they're looking to get it here in Salt Lake, where you've got Pence, who was leading the coronavirus task force in the administration, and Senator Kamala Harris, who is going to be trying to draw a sharp contrast amongst Republicans.
Kevin, this is brilliant. Okay, the vice president hours ago was studying the 25th Amendment of the Constitution to figure out what his duties would be if, God forbid, things got worse as well. He's in charge of our COVID project for the president. It's really worked out, right? How is he going to defend this and change the vector for the president?
Well, you know, and I say this very, very simply, right? Because campaigns are essentially, and not just campaigns, but also political offices are essentially small businesses. And so obviously the CEO, being President Trump, returning to work, but staffers at every level have contracted this virus. They're not immune to this virus, even though it is the office of the executive. That has led to a palpable level of angst that has permeated, based upon my reporting, throughout the president's re-election campaign, from the lowest of low staffers to the upper echelons in terms of the inner circle of the president's closest advisors. All of that just goes to show you what we are shaping up to have in Salt Lake City, which is a debate where you've got now the New York Times reporting that the debate commission is reportedly considering having there be a virtual debate in Miami next week, and a debate here in Salt Lake, where, as you mentioned it, both of these VP nominees are just a heartbeat away from the presidency.
Kevin, my old producer, came up to me here in London this morning and said if last week and the last debate was the fight, is tomorrow night the debate about policy? Do you think we can actually focus on policy tomorrow?
Well, stylistically, you're absolutely correct. There's a growing consensus, and the polls indicate this, that the president really took a hit in terms of his strategy that he utilized last week in Ohio. And so I would argue that you could not get two more stylistically different politicians in Vice President Pence as well as President Trump. I also want to note the incredible pressure that Senator Harris and VP Pence have right now, because both of them are also playing a political marathon game, and they could have political careers that extend beyond the top of their respective tickets. So there's that element to this as well. In terms of policy, look, geopolitically speaking, based upon the polls that have come out, the president has not enjoyed the bump that other world leaders have gotten out of contracting COVID-19. I'm thinking of UK Prime Minister Boris Johnson, where he got a slight bump, then went back down, or Brazilian President Jair Bolsonaro, who also received an increase in the polls. So again, there needs to be a shift. The Republicans haven't gotten one. You're starting to see polls tighten and the down ballot races as well, and that gets even more interesting in terms of the policy implications of what happens in now what JP Morgan and other analysts are saying could actually be a short election week in November if the polls stand.
Well, Kevin, where's the leadership coming from? So the president's tested positive for COVID. The first lady has tested positive for COVID. The campaign manager has tested positive for COVID. The press secretary has tested positive for COVID. The RNC chair has tested positive for COVID. The debate coach, the former New Jersey governor, Mr. Christie, he has also tested positive for COVID. Who's leading right now, Kevin?
In addition to 2 senators on the Senate Judiciary Committee who were on the confirmation process for the Supreme Court Justice, Judge Amy Coney Barrett. In terms of who's leading the president is leading. I can tell you, based upon conversations that I've had in the last 24 hours with sources at the White House as well as on the president's re-election campaign, that they are taking their cues from President Trump. I also want to note the economic angle here because it's something we haven't touched on. Speaker Pelosi, Secretary Mnuchin going to continue their negotiations. They're inching closer, albeit slowly, to a deal. $2.2 trillion for the Democrats, $1.6 trillion for the Republicans. And look, I mean, the fiscal stimulus, the economic angle here is not something that is the driving force of this race, which is something that Republicans were hoping would shift at this point, less than a month out until Election Day. Now you've got cases on the rise in battleground states like Wisconsin, and it's all anyone is talking about, not only in Ohio where we were last week, but also anecdotally here in Utah as well.
I'm still trying to digest what you said, that they're inching closer to some sort of deal on fiscal support. They've been inching closer for the past 2 months, frankly, for the past 3 months. Are we anywhere actually closer to doing something, or is it just that they're talking about talks a little bit more regularly now?
Lisa, I hear you. I put that question to sources back in Washington, D.C., and they're looking at the parameters of the debate that's framed. I was struck when the president was at Walter Reed over the weekend. He had a conversation with Senate Majority Leader Mitch McConnell specifically on the fiscal stimulus. A lot of the folks back in Washington, D.C., interpreting that, Lisa, as a step of this is a president who needs a win, and he's looking anywhere he can to get one. There's a lot of incentive now from the executive branch to deliver on stimulus.
They are talking about possibly talking about a fiscal package. Kevin, thank you. Lisa, I like that. Distance between the sides at the moment. I think Kevin mentioned it earlier this morning. 1.6 trillion for the administration, 2.2 for House Democrats. And then we have Senate Republicans who had a bill, I think we called it a skinny bill in the last couple of months, Tom, of about $600-odd billion. And it's the person we're not hearing from at the moment in quite the same way as we've been hearing from Secretary Mnuchin and Speaker Pelosi. How much have we heard from Senate Majority Leader Mitch McConnell, Tom, in the last couple of weeks on this very issue?
And as we grilled,
not much at all.
As we grilled Deutsche Bank yesterday, John Farrow, it's real simple. Their calculation is out near double-digit unemployment away from the improving U3 statistic. I mean, if it is an unemployed America, what are we waiting for? And you're hearing that from everyone. I mean, even the most conservative economists I know, John, are talking up stimulus.
You know the politics of this, though, Tom. Election 4 weeks away.
Oh, sure.
You ask the administration when the deadline is. I've asked the administration where the deadline is. There is no deadline. So the base case for people like Henrietta Tracer, Vader Partners, who I spoke to yesterday, is that we just keep doing this all the way through the election because nobody wants to be the person that walked away. And that's the story of the moment. We keep having these calls. We keep having these talks without much movement. And that number of $1.5 trillion, we've known that's where the administration has been for the last 2 months. I mean, we've known that.
Is the president tweeted today, John? I mean, you know, we've got everything but the 47 tweets we got yesterday. I'm kidding as well. Of course, one of them, John, was about Space Force, one of the programs that the president dearly loves. We're going to do SpaceX. This is an important another launch scheduled here for SpaceX, the Falcon 9 rocket at 39C. 39A, I should say, the Apollo Moonport Apollo platform at Kennedy Space Center. This is Starlink. This is a linkage of the internet up in space, particularly for people that don't have the internet. We're out about 1 minute 55. John, we say T-minus 1 minute 56 seconds and counting.
This is an incredible day for gamers because evidently this will allow much faster connection, much more instantaneous connection our children who are at home looking for activities.
Well,
in
it
this
is.
remote
It's a
area.
serious internet issue here of the multiple flights. There's been 92 launches. And of course, the idea of part of the rocket coming back to Earth with 53 landings out of that. To me, John, the most important thing here is the diameter. Launching a satellite, it's only 12 feet wide. It's a small rocket compared to Saturn, which was almost 3 times bigger.
Can we just sit on what Lisa mentioned, Tom, which is remarkable? The amount of technology that goes into something like this, which, let's be honest, is incredibly impressive. And yet it's to help gamers, Lisa.
Well, I mean,
get
look,
the extra
I'm
bandwidth.
being a little bit flip. I mean, it's to have a faster internet connection, but gamers have been particularly excited about this because this has been a really important aspect of just having instant connectivity.
Well,
it is a big business, John.
Okay, I'll go with that, but I'd also suggest that Mr. Musk and Mr. Bezos in competition and others are just trying to get internet access out to all. That's the lofty goal here as we move
Sounds
forward.
much nicer.
It sounds better. Thank you. I'm working at Lisa.
It was good. Good job.
Help me
Nailed
here.
it.
I'm trying to. I nailed it. Thank you.
I expected Lisa's comment from Tom and Tom's comment from Lisa.
Your world's getting
I'm not sure
turned
what's going on this morning.
upside down, John.
The temperature here at Kennedy Space Center is 78 degrees, which of course is always important for those that remember the difficulties of a winter space flight in ice. We don't have that worry here today at all. In looking at SpaceX and the excitement of this, the technology is so much improved from what we remember with Mercury and Gemini, and of course with Apollo, and then on to Skylab and the rest. Remarkable improvement here as well. Let us watch for the moment.
9, 8, 7, 6, 5, 4, 3, 2, 1, 0. Ignition. Liftoff.
Pitching downrange. Stage 1 propulsion is nominal.
T plus 40 seconds, Falcon 9 successfully lifting off from Launch Pad 39A at the Kennedy Space Center in Florida. We're taking that Starlink orbit to...
Still something remarkable to see out over the Atlantic Ocean in the Eastern Test Range. This is SpaceX moving forward, and of course there will be a sequence here of boosters and rockets. We'll have to look for that with all the new technology as well. I believe we may be seeing a challenging moment here. I want to look forward here. We're getting reports on this now from SpaceX. Let's continue with this, Lisa. Riley, please, let's continue with this video right now. We'll see the burst away. Matt Bloxham, it is always a risk here in a multi-stage and with the technology, and of course, to see the first booster pull away will be interesting. Matt, your thoughts, please.
Yeah, I mean, so far it looks fairly routine, and they've done this a lot of times now, so hopefully they've got this initial launch stuff pretty nailed down. It's, as you said earlier, gamers definitely really interested in this. It's something that Elon Musk pushed out a couple of days ago on Twitter. I mean, the history of broadband from space is that you have this really long latency, and that's the death knell for gamers. You need super low latency, and what they're promising and what's quite unique and different about Starlink is, as well as being very fast, it's going to have low latency. They've been doing a private beta test over the last few months, and I think some of the speeds have been a bit lower than people thought, around 100 megabits a second, but the latency has been low. It's been kind of 10, 20 megabits per second, which is kind of the equivalent of having a fiber connection on the ground. So, I think the early stage has been promising. They're going to go to a public beta test fairly soon, and so then you're kind of north of the US and into Canada, you might kind of be getting service fairly soon.
Matt, Is this really it's sort of emblematic of how private sector companies have taken the lead when it comes to broadening the cyber infrastructure? And do you think that there's going to be any push for more public involvement, given the fact that this is increasingly a utility and a must-have in an era of remote education?
Well, I guess what you've seen in the US, as you see in lots of European countries too, is that they're looking to the private sector to kind of fill that void that, historically you would expect the public sector to kind of play a role in. And to some degree, you kind of get funding coming to these private companies from the public sector, but with strings attached. But, I think that for Starlink, they're kind of SpaceX, they're kind of doing this as part of, a kind of three-legged kind of strategy, if you like, with the NASA missions to the International Space Station, the kind of longer-term vision about getting to Mars, and kind of Starlink fits somewhere in the middle that uses some of the older technology they developed, but hopefully, if it's a commercial success, will fund the Mars mission too. So I think it's this new model we're seeing across the globe of the public sector looking to the private sector to kind of fulfill some of these kind of universal access obligations, really.
We should do this more often. Matt, great to catch up. Matthew Bloxham there of Bloomberg Intelligence. We'll keep you up to speed on this launch. Do want to touch base with the price action of this morning. We do turn around in the equity market. We are unchanged on the S&P 500. We were negative briefly. We turn around now Tuesday morning. The FX market, euro-dollar 117.90. Unchanged. Fed speak still to come from Chairman Powell. ECB talk from Christine Lagarde. And as Lisa mentioned at the top of the hour, you'll hear from the chief economist, Mr. Philip Lane, too. And in the bond market, yields come at a single basis point. Your yield, Tom Keene, 0.77% on a 10-year. Quite a turnaround in the last couple of days.
It's been a huge turnaround. There's no question about it. And again, John, I go to the 2 standard deviation moving yields, granted out of a very, very quiet space. I mean, John, your comments on 0.77%, where was the upper bound of your range on the 10-year yield?
The range since April, I believe, has been 50 to 90 basis points, Tom.
Up to 90, up to 0.90.
Don't remember the precise date, but early June, fair. First week of June, after the rotation happy talk of the equity market stalled, that was when the 10-year topped out as well, early June.
West Texas, 39.87 as well. Oil with a continued lift this morning, red and green on the screen. Right now, on the pandemic and the extraordinary news flow that we see with the Johns Hopkins Bloomberg School of Public Health. Amesha Dajja joins us right now, their senior fellow. Dr. Judge, I want to focus here on the news flow, but I'd like to put it in a professional context. The president said he may be immune. I know he's speaking as a patient. He and I are uninformed compared to professionals like yourself. What does immunity mean in a virus?
What immunity refers to is the ability to fend off further attacks of whatever pathogen you're talking about. And usually with an infectious disease, after you've been infected, there is a period of time when you've developed antibodies where you are impervious to further infection with that same pathogen. The president will likely be immune for some period of time after he recovers. That immunity will last maybe several months to a year, and it may not be completely that it protects him from reinfection, but prevents him from getting severe disease. We're still learning what immunity means here, but in general, we're seeing that trend followed with this coronavirus.
Dr. Adalja, as President Trump and his entire circle battle the virus, we're seeing a similar trend around the country and frankly around the world. Europe also fighting a number of hot spots with the virus spreading faster now. How bad is it? I mean, are we on a tipping point for something substantially more significant than perhaps medical professionals have been expecting for a second wave?
No, I think it is going to get worse before it gets better with this virus. There is a weather change going on in the Northern Hemisphere where people are going to be doing more activities indoors. And we know that the virus spreads more efficiently indoors than outdoors. We also have a lot of complacency going on because this has been 10 months now since the virus has been discovered, and people are getting more lax with their habits in terms of social distancing and facial coverings. So I do think that we are still going to continue to see more hotspots flare. We're hearing about hospitals in Wisconsin that are under stress. I think this is the new normal. I think, as a country and maybe as a world, we really failed in general at controlling this pandemic. So it is going to be something that we're going to be contending with for several months in the future.
Doctor, I'd love your thoughts on localized restrictions. In New York City right now, I believe it's about 9 zip codes that seem to be the problem areas, and the 9 zip codes are going to have local restrictions. Doctor, how effective are local restrictions when, let's think about it, just in terms of common sense, if you're an individual, you can still leave that area and go somewhere else and do what you need to do somewhere else?
Yeah, it's very challenging for local restrictions within a city to be something enforceable or something that people are going to obey, because what you can end up doing then is, paradoxically, suppose you shut all non-essential businesses in one of those zip codes, then everybody's going to go to the next zip code over, and now you have more people that are infected tracking that virus into another area that hadn't been affected. So you have to be very careful about this. In general, we want targeted and precision-guided public health, but you have to make sure you're looking at it in the long term and realizing what the negative consequences or the unintended consequences might be. What I think needs to happen in those zip codes is we really have to get more testing. We have to get much more public health involvement in trying to convince those people to change their behavior, to wear face coverings, to not have gatherings.
Doctor, you are on the NCAA COVID committee. Your Carnegie Mellon is not playing football, and down the hill, Pittsburgh will play Boston College this weekend. Who's right?
Well, I think that what's happened is that the Division I schools have the ability to do some modicum of testing, which they think can counterbalance the risk of infection. So I think that this is something that we've debated with throughout the pandemic about sports. Schools like Carnegie Mellon, where football is not important, where I went, I never went to a Carnegie Mellon football game. I can't even name a Carnegie Mellon football player. I think it's probably a wise choice for them, because it's not something that they really are important. It's important for them. For Pitt, it is kind of in the lifeblood there. So they're trying to find ways to mitigate it. Obviously, you can't get the risk down to zero. You have to be prepared that they're going to have cases, that they're going to have to put people in isolation. All of that is going to happen with these games. All you can do is try and give people the best tools to reduce the risk, reduce the harm. But many of these Division I football schools basically are going to go forward anyway with the antigen test as one way to minimize risk, but it's not going to be zero. And it is going to be a disruptive football season this year. And at least we're not having fans so far in the stadiums, so that's not created a mass gathering effect, although that may be changing in the next couple of days as well.
Dr. Adalja, thank you so much. Amesh Adalja with us, Johns Hopkins Bloomberg School of Public Health. And I should point out, Mr. Bloomberg is the founder of Bloomberg LP, this television and radio property as well, and of course his philanthropy to his Johns Hopkins University. John, red and green on the screen, and I would actually say a little bit of growing green as we monitor SpaceX after a Falcon 9 launch.
Futures up 2 points. I'm not sure there's a causation there.
We'll find it.
Might be a little bit of a correlation, but not a causation.
Same mathematics.
In the equity market up 2 on the S&P 500.
It's all Newtonian.
You, I'm trying daily.
It's all Newtonian.
I really am. I'm drinking more in the afternoons, but I'm trying.
Are you?
I promise you.
That's good news.
The chairman of the Federal Reserve, 10:40 Eastern. The ECB president, Christine Lagarde, 9 Eastern, Tom. So
they'll both
the
be
top of
talking
the ECB
SpaceX.
and the Federal Reserve talking a little bit later. I'm sure they'll have a quick mention of SpaceX and then maybe get to the inflation debate as well, Tom.
I'm sure.
I think they will. I mean, the inflation debate really front and center. John, seriously, the inflation vector on both sides of the Atlantic really different, with disinflation indicated five-year break-evens in Europe and a little bit of an inflation tendency in the United States.
Yeah, inflation expectations in Europe get your attention this morning, and I think that's going to be front and centre for this ECB. And the commentary around the European Central Bank more recently, Tom,
Did I do okay
really
there, John?
highlighting perhaps a divide. You did better than okay. You're doing well.
Okay.
All right?
I'm okay.
Shall I get to the price action?
So far, we're tots
You're
free.
all right.
Look at those
They
markets.
put
I reckon I
the
might
rocket
make-
put
I'm going to make it to Thursday.
the rocket put a gooner up in space.
Something like that.
The president back in the White House from London and New York. Attention on DC, futures up. This is Bloomberg.
With the first word news, I'm Rishika Gupta. President Trump says there's no reason to fear the coronavirus that has killed more than 210,000 Americans. The president has been released from the hospital where he was treated for the virus. A White House doctor says he may not be entirely out of the woods yet. The president will receive further care over the coming days. And President Trump intends to be ready to debate Joe Biden next week, despite just being released from the hospital. That's according to Trump campaign spokesman Tim Murtaugh. But Murtaugh says the campaign will not agree to the moderator being able to mute the candidates when their time has expired. That could prevent the kind of interruptions that marred last week's debate. The CDC says the coronavirus can spread indoors through the air beyond 6 feet. That's guidance that could pose new challenges for schools and businesses that are trying to reopen safely. The CDC's update says the virus can be spread through particles that linger in the air and affect people separated by distances that had been considered safe. The Supreme Court has reinstated a Republican-backed requirement that witnesses sign every absentee ballot in South Carolina. Democrats argue that will make it harder for thousands of people to vote. The ruling will not affect absentee ballots that have already been cast. You'll have to excuse executives at Allianz for not singing Hooray for Hollywood. A unit of the German insurer is bracing for a flood of claims after movie and TV studio had to curtail production during lockdown. The Allianz unit has set aside about $575 million this year for coronavirus-related claims. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
tracks the virus by essentially saying masks don't matter, social distancing doesn't matter, I think is responsible for what happens to them.
Presidential candidate and the former Vice President Joe Biden there weighing in 4 weeks away from the election. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, getting you in shape for the price action today. 1 hour and about 42 minutes away from the opening bell. Your price action shaping up as follows. Equity futures just about turning positive in the last 30 minutes or so. Up 2 points for the S&P 500. Positive, not even 0.1%. In the FX market, euro dollar approaching a 118 handle at 117.97, up about 0.1%. We talked about it all morning. You will hear from Lagarde and Chairman Powell a little bit later today. And in the bond market, there it is, 0.78% on a US 10-year yield. Big move higher in yesterday's session. Plenty of reasons for it, Tom. Don't overlook the economic data in the United States. Let's just sit on that just for a moment. The ISM was really quite impressive relative to some disappointment in Europe. And that changes the narrative of just a few months ago.
And in the last hour, John, this is a sprightly tape. As you mentioned, the 10-year yield, 0.7818. We quote to 4 decimal points on Bloomberg surveillance. But, John, there's some other indicators on the tape of a general lift here on a red and green screen. What else do you see?
A mild move. I'll say it's mild, but it's a move nevertheless.
It's a move.
I think the focus of yesterday, Tom, is that maybe we actually have an election result come November 4th. That's the narrative in the market. No political bias, just the view of many people on Wall Street, including JP Morgan and Goldman Sachs and others as well. But I just keep saying it. Don't discount the economic data. There are questions about the momentum in the economy. That ISM print yesterday was pretty decent.
28 days to the election, and of course, some of the nuances here get pushed aside by the brute force of politics. Michael Waltz understands that. He is a Republican from Florida, the 6th Congressional District. This is from Jacksonville in the south of Jacksonville down. He is the congressman of Daytona Beach. Michael Waltz, thank you so much for rejoining us. It was good to see you the other day. Your guy has to win Florida. Your district is 12-13% Hispanic. How does he get the Hispanic vote? How does he get the increasing Cuban vote in Miami?
Well, I can tell you he's doing very well with the Cuban vote and the Venezuelan vote for one simple reason. The word socialism doesn't ring too well with that part of the Hispanic vote. These are people who have suffered personally, who have lost family members or still have family members suffering in Cuba, in Venezuela, under the Maduro regime and under the remnants of the Castro regime. And the move by the progressive left to actively say and advocate socialist policies is really driving Hispanics towards the president and towards the Republican Party.
Well said. You've stated your case. Do you see any indication that Mr. Biden of Delaware has decided to support the far left of the liberals on that matter, or is he running more centrist?
Well, I think he's been kind of all over the place, to be honest with you. At some point, he was for the Green New Deal. It's on his website. Then in the debate, he says it's not his plan. His vice president certainly has pounded the table for Medicare for all. He brought in the progressive left into his working groups for health care. Look, government-run healthcare is not the solution. Look at the problems with the VA, which I hope we'll talk about, which runs from the government 1,200 hospitals and clinics, and yet still is not serving our veterans. That's the best example of where the left wants to go, and I absolutely do think that will dominate Biden's policies.
I'm sure that you want a debate in Miami just for bragging points for Florida and all that. The governor, no doubt, wants a debate in Miami as well. How do we do a debate in Miami that fits the realities of one candidate healthy and the other one rather ill?
Well, the typical course of the virus and the quarantine should be done by that debate in another 10 days. The president is looking much better. And I think at that point, we'll be able to have the debate. They'll stay socially distanced. Their teams will stay will stay apart and stay distance as well. Very few people are going to be allowed into the room. But I think that debate is important for people to hear. And it's important, per our earlier point, on where the left wants to go in terms of what it calls democratic socialism, to have that in Miami. in the midst of people whose relatives, family members, and even themselves have suffered. There is a huge refugee population, a Venezuelan population that has been brutalized by the Maduro regime in Venezuela, and I think that's a debate that needs to be had and a great place to have it.
Congressman, I think we can anticipate one of the questions that will be asked next week, and I do wonder, I'd love to hear what your response to this question would be. If someone poses the question, if the president can't keep the White House safe from COVID-19, how does he protect the country? What is the answer to that, Congressman?
Well, look, I think the president has kept the White House safe for an extraordinary amount of time in this year. I've personally been in and out a number of times, on and off of Air Force One. Look, at the end of the day, no one said that this virus would never spread. The goal was to flatten the curve, to get a hospital system to buy our hospital system time to handle it and not become completely overwhelmed while we march towards therapeutics and a vaccine. So if those were our goals, which we have to keep an eye on, I think we have largely hit those. Meanwhile, I do think Biden needs to be held accountable for not wanting a shutdown from China, for not wanting a shutdown from Europe, for calling those policies xenophobic, and for himself and his advisors early on not advocating for some of the stronger policies that the president put in place.
Congressman,
so I think there's a lot of spin going on here in terms of what he would have done had he be president. And again, that's what debates are for, and that's what's going to come out.
Congressman, just real quick, do you think that President Trump has handled the own virus in his cabinet for himself well, given the fact that he's currently displaying himself not wearing a mask and going for what some people have called a joyride in front of his supporters with Secret Service members in the same car?
Yeah, look, so there's a big difference when you have the luxury of just being a candidate versus when you have to govern and when you have to lead, and you have to lead with agency and cabinet heads that have to lead the Defense Department, the State Department, and others, and other critical departments. You have to be out there. You have to find ways to walk and chew gum. And I think that's been the president's message all along, is we cannot go to a 100% shutdown. It's just not a responsible policy. We were talking about veterans a moment ago. You know, we're seeing a 20 to 30% spike in veteran suicides just in the last year because of the isolations that are getting put in place by mandatory shutdown. So I think the president's message is we have to find ways to safely do both. We have to he has to govern and to lead. I think that's what he's been trying to do.
Congressman, fantastic to have you on the program today. Hopefully we can have you back soon. Thanks for giving us your time. Congressman Michael Waltz there, joining us on the latest. From New York and London, good morning to you all. This is Bloomberg Surveillance. Coming up shortly, Bob Doll of Nuveen.
The African American community in general, we have a history of having to support each other, right? And so there are opportunities that are presented that we don't often qualify for. So oftentimes we have to turn to our neighbor and turn to people within our community to assist us, to help us.
support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
People don't like the fact that they don't know what their next 3-6 months are going to be like. There could be a dip, but people want to come in and buy that dip.
There has to be more fiscal stimulus. The markets are expecting it. There's a real risk that consumer spending could be negative in Q4.
Markets are going to force the government to act here.
Governments have control of this, not central banks.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance on Bloomberg Radio, Bloomberg Television, worldwide. Thrilled you are with us across this nation. The news flow, absolutely extraordinary. John, I want to get to the markets in a moment. The president tweeted. We've had 2 tweets in the last 20 minutes, but they're longer tweets today than the shorter tweets, obviously signaling his recovery. Both tweets say, get out and vote at the end. We'll leave it at that. Well, I'm sure we'll hear much more from a president from the White House today, masked or maskless as well. John, I want to go to what's clearly the market story, which is a pretty moldy 2 hours ago, and a nice recovery here with yields getting right back to the enthusiasm of yesterday.
Well, I think there's 3 issues you've got to look at, Tom. One is the improving health of the president, according to his doctors. 2, the economic data. We talked about that briefly in the last hour, the momentum. And 3 is the prospect that we don't have a contested outcome November 4th when we wake up after the November 3rd election. And going off the national polls, and I know the risks around that, we all do. This is a snapshot of where things are, not a prediction of where they will be. But the snapshot right now, 57.41, according to CNN in that poll, Tom Keene. Yesterday, NBC Wall Street Journal, 53.39. But the 57.41 from CNN, the 57 being the former Vice President Joe Biden, and the 41 being the President of the United States, Donald Trump. That poll, Tom, conducted from October 1st to October 4th. That is important because we've been waiting for the polls and what they look like after the president tested positive for COVID-19. It's the first snapshot on a national level, and I stress it's the national level, not the swing states, and I know people want to get granular about it, but it's a big number, Tom, and it doesn't look pretty.
It's a big number, 1,205 adults on that poll from CNN and SRSS. Lisa, all of this mixed together, we haven't talked about it in our first hour of radio and television this morning, is the update on the stimulus, and am I right, Lisa, there isn't an update?
Well, they're talking. And they continue talking about talking and talking some more. I mean, honestly,
I mean, it's like Brexit.
Yeah, it is our Brexit of the United States. That is correct. That is a very accurate characterization. There's a question: at what point do markets stop sort of catering to every head fake? Every time we get a headline saying that stimulus is more likely, given softening on both sides, with President Trump being ill, that was one theme that was driving a risk-on feel. Other people saying, as John was saying, that possibly a decisive election will give some fuel to this risk-on feel. Regardless, I will say it is broad. And Tom, you are seeing it in credit, people piling in. There is a feeling we are closer to the other side. And it comes even though the virus counts are getting worse in many places. A lot of contradictory crosswinds here. The volatility not yet completely dead.
Yeah, the contradictory crosswind. John Farrell, I should have loaded the boat in March. Of course I didn't. I mean, triple leveraged all cash. But John, I mean, look, come on. We're at Dow 28,000, SPX 3408 on the close, and the VIX really shows that uncertainty out there, doesn't it? 28.34.
Everyone's got a trade to sell. The volatility now, the volatility looking out into year end, that was all about this contested election idea. And for me, I keep going back to this, there is a difference between squeezing positions and having a policy event that drives durable change. And I think the polls of the last couple of days starting to squeeze some of those positions, the longs at the long end of the Treasury curve, elsewhere in the equity market, driving that internal rotation. It is only when you wake up November 4th that you really start to appreciate policy. And just remember 4 years ago, many people didn't anticipate that the president would be Donald Trump. They also didn't anticipate the outcome of the president being Donald Trump, which was a market that ripped. And it took about 5 minutes for people to get their hands around it. And I think it's still too early to make a decision with any conviction of what a Biden presidency, a potential Biden presidency, would mean for this market over the long term. We can sit here and say with conviction it will squeeze positions quite easily because this market is positioned for a contested election. But sitting here with confidence and conviction to say it will mean anything else beyond 3 months, 6 months, 9 months, 12, I think that's too difficult still.
Oil printing $40 a barrel, West Texas Intermediate 40.00, Brent crude 42.07, gold up $3, 19.23 the ounce. As John mentions, you've got to be in the market to play in the market, and Robert Dahl of Nuveen has done that for years. Bob Dahl joins us this morning. Bob, how do you stay in a market here with all this uncertainty?
You recognize that the underlying economic fundamentals and therefore earnings, we're in a reflationary period. You all just summed it up very well in the last few minutes.
We doing okay, Bob?
You're doing great. You're doing great. You see, we're about to get amazing third quarter GDP. I know that's history. Good third quarter earnings. Reasonable outlook for the fourth quarter fiscal policy package or not. We're seeing precious metals. We're seeing industrial commodities moving up. Obviously the stock market cyclicals are beginning to do a little bit better, and even the bond market is waking up to say inflation's not going to be zero forever.
What do you make of the relative story right now, Bob, between Europe and the United States? 3 months ago, the happy talk around Europe was almost deafening. And now you don't hear much of it anymore. And the momentum, relatively speaking, is not in Europe right now. It's in the U.S., Bob.
No question about it. Our economy came back faster because our policy mix was gargantuan and fast. I mean, you can't find another period in history monetary and fiscal policy was this quick and this aggressive, and that has buoyed our economy and got us out of what could have gotten to be a longer and deeper recession when we shut the economy off. And that's why the U.S. is doing well.
So I sense where you want to be, the United States over potentially Europe. Let's talk about where in the United States you'd like to be. Yesterday we saw that internal rotation that the likes of JP Morgan, Goldman Sachs and others are talking about, that move to the cyclical parts of the equity market. Bob, why do you think we can have a sustainable move there and not just a position squeeze?
Well, there is some position squeezing going on, no question. And I think it's not an either or. I think it's a both and. If you've been successful in equities, you've had technology and healthcare and not many small stocks and not many cyclicals until the last few weeks. Now it's a both and. We had the run, for example, in financials yesterday. Today it might be the tech stocks coming on again. We've had this rotation with an upward trend that's going to continue. I like some of the consumer cyclical names, the Best Buys, Lowe's, Target. targets. Even some of the home builders, I'm not giving up on health care. I think there are good news there, regardless of who gets selected. The stocks are not expensive. So they're the places I would camp out. Where's the cash flow? Can you reinvest it for some growth? And are you doing well and making money and cash flow in an environment that is post-coronavirus?
Bob, the most read story on the Bloomberg yesterday had to do with Wall Street analysts saying that a Biden win could be a bull case for U.S. equities. There was a lot of pushback, people saying it's just people going with their political beliefs. But Bob, do you adhere to this narrative that a Democrat sweep, both of the Senate, the House, and the presidency would be positive for markets?
Probably initially, yes, because we will get a fiscal policy spending that will buoy the economy further, probably more than if it's a re-election of Donald Trump, particularly if it's a mixed Congress in that sense. Longer term, you know, you're going to have tax increases, you're going to have re-regulation. That's not great for the market. So there could be this whiff in the air of the positive reflationary trade, as I mentioned, getting goosed a bit from some fiscal policy spending, and then people will wake up and say, not so fast.
Well, and this has to do particularly with tech stocks, big tech stocks, because not only do you have an increasing antitrust sentiment that is growing certainly among the Democratic Party in Washington, D.C., but as you said, the tax changes that Joe Biden would implement would disproportionately hit big tech companies, according to analysis by Bank of America. Would you go underweight tech in a Democrat sweep?
I wouldn't go underweight. I would probably have less in a Democrat sweep than I would if the president is reelected. But I wouldn't go underweight. The underlying growth is just so powerful. COVID was a positive for the tech sector. Look, we're going to have, under either administration, continued queries of those companies. And look, the camel's nose under the tent. The government wants more money from these companies, and that will hurt the multiples. I'm not sure it's going to hurt the earnings.
Hey, Bob, great to catch up, sir. Don't leave it so long next time. Bob Dole there, Nuveen, Chief Equity Strategist. Thank you very much. The President of the United States, active on Twitter in the last hour. Here's one of them in just the last few moments. A tweet on flu season coming up. I'll read just a part of this tweet. Are we going to close down our country? No, we have learned to live with it, just like we are learning to live with COVID, in most populations far less lethal. Now, Tom, let's put this together with a poll we had from CNN just a couple of hours ago, 57-41. What was interesting about that poll, when you get into the details from CNN, is that the president was not losing ground that he was holding to Joe Biden. Joe Biden was taking it from elsewhere. And what's intriguing about this poll is that the support of the president is not gaining from new areas that he needs to tap into. And I think comments like that, they resonate with his base. They won't resonate with the areas of the demographics elsewhere, Tom, that he needs to be tapping into and needs to be winning.
Well, this is an important observation, John, and what I would suggest in the conversations we're having here on radio and TV, it's simple. All the experts are telling us he's just simply going to his base. I don't see in any of the activity of the last 4 or 5 days, I can't remember, the calendar becomes a blur, but I don't see any indication he's going to the marginal voter.
To quote CNN, the president does not appear to have made any gains among the groups his campaign needs to attract in order to dent Biden's long-standing lead. Now, Tom, you've got the details on this poll. It's not a huge amount of people to survey, of course, and it's incredibly random, but I think that snapshot, that will resonate with a lot of people.
Well, yeah, the next 3 or 4 polls, and again, the battleground, you mentioned, John, the battleground state polls, I think we need 10 polls now just to see where the landscape is. I'm going to suggest it's not 57-41, but nevertheless, the gap is the gap.
Coming up on this, Ed Mills, looking forward to catching up with him. Raymond James, Washington policy analyst, coming up very shortly. From London and New York, your price action shaping up as follows. Equity futures +3. We're positive about 0.1%. Outside of that, I know equity's got a lift Monday, but let's face it, for anyone not buried in stockland, it's about the bond market, Tom Keene. 0.78% is your yield on a 10-year.
I need 29,000.
Just can't do it. Just can't get out. You got any commentary on crude? 40 handle. Do you like that?
Yeah.
No? Euro dollar 118? You want to tell us your positioning around foreign exchange? Don't fancy it?
No,
we could do this all day, Tom. Can we get to the next screen? There isn't one. From London and New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Trump and his allies look to capitalize on his release from the hospital. They're painting his return to the White House as a metaphor for his strength a month before the election. Meanwhile, the president is pointing to his own experience to implore Americans not to fear the coronavirus. A new CNN poll shows Joe Biden's lead over President Trump has expanded. 57% of the likely voters surveyed back Biden, 41% back the president. The CNN poll was conducted entirely after last Tuesday's debate and mostly after the president's coronavirus infection was made public. The European Union is ready to call Boris Johnson's bluff. Bloomberg has learned that the EU has no plans to offer concessions to the British Prime Minister before next week's Brexit deadline. It's betting Johnson won't make good on threats to walk away from trade talks if he doesn't get what he wants. And SpaceX has finally launched a Falcon 9 rocket carrying 60 Starlink internet satellites. They'll join hundreds of others in orbit around the Earth. Recent launches have been plagued by a variety of problems. Two were just halted last week, just before liftoff. SpaceX's billionaire CEO Elon Musk said he would check launch pads at Florida's Cape Canaveral before today's mission. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I stood out front. I led. Nobody that's a leader would not do what I did. And I know there's a risk, there's a danger, but that's okay. And now I'm better, and maybe I'm immune. I don't know.
The President of the United States addressing the nation and also the world in the last 24 hours, out of hospital and checking back into the White House. From London and New York, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 1 hour, 12 minutes away from your opening bell. Your price action shaping up as follows. Equity futures on the S&P 500. They bounced back up 0.1%. In foreign exchange, euro-dollar, almost 118. We approached that level at about 117.96-ish. And in the FX market, that's the story for you. Stronger euro, slightly weaker dollar on that currency pair. And the bond market, 0.78% on a 10-year. We approach 80 basis points on a 10-year yield. Chairman Powell very much in focus. Keep beating this drum, though, Tom. Data so far okay so far this week.
Well, correlated okay this week, but we had a pause there 3-4 hours ago, and we really recovered nicely here again. Futures up 3, the VIX 28.34. What we've really tried to do, Lisa Abramowitz, Jonathan Ferro, and myself, is avoid the punditry and try to talk to people with skill sets of our politics, of our economy, and of the nation as well. Edward Mills is the Washington policy analyst at Raymond James. That doesn't describe his service to the nation as staff for the House Financial Services Committee and working with the Congresswoman from New York City, Carolyn Maloney, over the years. Ed Mills joins us right now. Ed, the punditry is being buffeted around by the virus, by the president, by the debate performance, and all the rest. Do you discern a clear policy of Trump or a clear policy of Biden, or does that remain after the election?
You know, I think we've been kind of somewhat devoid of some of the policy discussions, partly because, you know, as you have highlighted, this for Donald Trump is about energizing his base. And so kind of any action that he comes out with is trying to see if he can kind of get someone who supported him in 16 that didn't show up to come and show up here in 20. And for the Biden campaign, what I've seen is they want this to be a referendum on Trump. They don't want it to be a choice between the two candidacies, because when it is a referendum on Trump, that's where they are the strongest politically. Trump would like to make it a choice between the two and try some of the most kind of unpopular policies of the Democratic Party to Biden, but Biden has kind of so far largely kind of ignored getting into the details, so it does not turn into that choice election.
Ed, we see that in the polls, though, don't we? The base is energized for the president. It has been. We haven't seen it fade away. It's been strong, reliable, resilient for a long, long time. Is it enough, Ed?
I don't know yet. I mean, I think that if you go on polls alone, you would say clearly that it is not enough. I think if you are looking at the data, say, you know, kind of one of the swing states, the state of Wisconsin, a state that Donald Trump won by fewer than 25,000 votes, you look at kind of where is his base in Wisconsin, and you recognize that where he did the strongest were white working class males. Well, there were almost 500,000 voters in Wisconsin in that demographic that didn't vote last time. And so kind of if Donald Trump has a chance of winning this, is that once again, there would be some sort of state-level polling error and kind of the turnout metrics that we're using are incorrect. I think they have decided that's their best chance of winning. If he is successful or not, I think there's a very small margin of error there, and I think it is a much more difficult task than pivoting, trying to pick up the voters in the middle, but it is maybe an indication of how few undecided voters there are at this point.
Ed, as Tom and John were talking about this morning, there's a lot of focus on that CNN poll showing a 16 percentage point gap with Biden out in the lead ahead of Trump. Do you buy these polls, and do you think, or do you have any sort of quantification of the likelihood of a Democrat sweep come the first Tuesday in November?
Yeah, we at Raymond James have kind of published that a Democratic sweep is the most likely scenario, and we've been saying that for months. I think that these polls, because it came at a specific point in time when there has been a big news event, I kind of take it as a indication of maybe a spot in time. People will look back 4 years ago, immediately after the Access Hollywood tapes, and there were some polls that Donald Trump were down 14 percentage points in.
Yep.
And so we need to still kind of maintain kind of the difference between the national polls, the difference between kind of what happens after shock events, and recognize that this is 2020 and there's a lot still left to happen between now and Election Day. It does seem to be kind of clear where this election kind of has been trending, but that does not mean that's where it ends up.
Edward Mills, you are maybe more qualified than anybody on the planet to describe a Biden presidency from the 12th Congressional District of New York to the 14th Congressional District, which is Maloney of 27 years of service and AOC up a little bit north of there. Can Biden be a president and pay homage to the liberal left as well as the middle ground, or is that a pipe dream?
I think there's going to be a lot of tension if he wins between kind of various camps within the Democratic Party. I think that there is going to be some effort to kind of have some unification. You saw that already with kind of adding AOC and John Kerry to a climate agenda, having an agreement between the Sanders campaign and the Biden campaign on a whole host of issues. He is someone who's been in D.C. for 47 years. Compromise used to be something that won you elections. In the last decade or so, compromise is a dirty word in D.C., and it's akin to selling out. I do think that, kind of Biden, someone who was in the Senate for 40 years, is probably going to focus most on kind of the new senators who get elected and some of the more moderate senators, seeing what they can get and what is the art of the possible. Because perfect can't be the enemy of good, or you don't get anything done.
Ed Mills, great to catch up, sir. Good to hear from you. Ed Mills there, Washington policy analyst at Raymond James. Tom, I think we all reflect on what Ed had to say and hope that in the coming days we do focus a little bit more on policy, particularly with the debate with the vice presidents, the current vice president and potential future vice president tomorrow evening. And in the future as well, if we get the debate in Miami, Florida, between the presidential candidates, I hope that can be a policy focus too, because it was severely lacking in the last one.
Well, we're going to find out, I think, in the next number of hours, really, how this debate in Miami will go. Of course, the zeitgeist is a virtual debate and the president doesn't want a mute button, et cetera. But I really wonder, John, how they're going to do it in 15 days. As some of our guests have said, it's still a fair amount of time to figure out how to get to October 15th.
4 weeks away from that election, just around the corner. Equity futures
days.
Shaping up as follows. This Tuesday morning, we look a little something like this. The S&P up 4. We advance around about 0.1% on the S&P 500. Foreign exchange, euro-dollar, 118 handle going into President Lagarde and Chairman Powell speaking a little bit later, separately, not together. In the bond market, just south of 80 basis points on a 10-year. We're getting there, 0.79%. From London and New York, alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg.
What would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From London and New York, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. On this Tuesday morning, October 6th, your equity market turning around. Futures up 4 points, up 0.1%. With your economic data in America, here is Michael McKee.
Good morning to you, John. Well, we have the U.S. trade deficit out for the month of August, and it is another new record deficit of $67.1 billion. Up from 63.6 in July, and it does suggest then a little bit of a drag on third quarter growth, even though third quarter growth overall is reasonably good. Exports were up by 2.2% during the month to 171.9 billion. Imports, though, up by 3.2%, 239 billion, so many more imports than exports for the U.S., and the trade deficit widens again. That is probably a problem for Donald Trump if anybody gets around to talking about things like the economy in the debates, because, of course, he promised to get rid of the trade deficit and to get rid of the trade deficit with China as well, and that's kept widening.
Mike, I want you to address the doom and gloom crew who are going to look at this with dollar weaker here, 93.36 on DXY. Address the doom and gloom crew that say the world's coming to an end and the only solution is dollar depreciation.
Yeah. Well, the problem is that we spend more than we take in, and so we need to have a trade deficit. It widens the trade deficit. We embraced dis-saving in 2017 when the tax cuts were put into place, and so you're going to have a wider trade deficit on a regular basis. At the same time, you've got the Fed with a little bit tighter policy than they have in Europe and Japan, where they've got negative rates. So we are attracting capital from overseas and, again, creating that trade deficit, and it widens.
Yeah. Well, Mike, I want to go into something that you mentioned, which is that the trade deficit that the U.S. has with China is actually deepening. What's the anatomy of that? Is that the U.S. importing PPE and other medical equipment from China and not exporting as much? And how far are we away from the targets that were implemented?
We're quite a bit of ways away from it. You can see, I think you had a chart prepared that shows that we're about halfway there to what they said they would buy, but we're 3/4 of the way through the year. And so at this point, the Chinese are a long way from living up to the phase one trade deal. Now, a lot of that has to do with the pandemic and the fact that demand in China is down, so they don't need as much stuff from the United States. And there are also the political aspects of it. Are they not buying because they don't like what Donald Trump has been doing? That's hard to tease out, but it can be measured both in renminbi and in dollars, and either way you look at it, we're only about halfway there. Now, the only numbers that count as far as the deal is concerned is the end of the year. So they still have time, but a lot of trade experts are saying they're not going to make it.
One final question, Michael. My chart of the year, I think 2 years ago, was the twin deficits, which was from decades ago. Michael, you and I are just barely old enough to remember that. We have exploded out on fiscal deficit and trade deficit to something that to you and me and to President Reagan is unimaginable. Do the economists that you speak to feel we can rebound from this horrific twin deficits?
Well, first you have to say, is it a real problem? And so far, it's not been proving to be a real problem.
Fair.
But over a period of time, yes, yes, we can rebound from that. Nobody expected us to go into a budget surplus in the late 1990s, but we did. So if the right policies are adopted, you can get there. It's going to be much harder, though, because the hole is so much deeper.
The hole is extraordinary. Michael McKee, thank you so much, our international economics and policy correspondent, of course, with his timely interview yesterday with Mr. Evans of Chicago. Thomas Costard, Pictet Wealth Management Senior U.S. Economist, joins us. Let me cut to the chase, Thomas, and that is simply, does all this discussion of trade deficit matter? A lot of people dismiss it. I'm from the old school, no, I will not. Does this burgeoning deficit matter?
Well, there's definitely a political element to that. I mean, we know that Donald Trump did promise to cut that deficit, and we're just seeing that it's reaching record highs. So, you know, definitely from a political angle, it has some importance. Now, from an economic standpoint, I don't think it has. I don't think it's really a factor for the U.S. dollar. I think the U.S. dollar is much more driven by global growth, and also the difference between global growth and U.S. growth, as well as you know, the differential in interest rates. What we're seeing so far is that the Fed has been cutting rates to zero, so actually all countries in the world are more or less at zero right now. So that's probably a headwind to the dollar going forward.
Do you think, Thomas, that the market right now is overpricing or underpricing the U.S. recovery?
Well, it's hard to say. I think the recovery is more fragile than widely thought. I think it really depends on fiscal stimulus. I think what you're seeing now is the data seems to be ebbing. If you look at jobless claims, if you look at spending, if you look at incomes, I think the U.S. economy needs a new dose of fiscal stimulus. I think it will come, but you know, there's a high uncertainty about that. But definitely the problem is, the U.S. economy cannot go on its own two legs. I think it needs support.
Well, Thomas, many people said that as we got deeper into the summer, and here we are in October looking at the September ISM, and it was pretty decent. What explains that?
ISM is a survey that only says whether, you know, things are looking better or worse. You know, doesn't say anything about the quality of the recovery. I think if you look at employment, we're still down by about half in terms of job losses. You're seeing permanent job losses also rising. I think you're looking at Q4 growth at around 0%, actually. So that will be a big plateau for Q4 growth after a strong rebound in Q3. So the U.S. economy is at risk of stalling, and I think that's the risk going forward.
Well, Thomas, I'm sure if the ISM fit the narrative, we'd be pointing to the ISM as a data point to support your view. And right now, that ISM is pretty decent. It correlates pretty well with GDP over time, doesn't it, Thomas? That forward momentum in the United States economy, I'm not saying it hasn't decelerated, but it's still there. And relative to Europe, the happy talk around Europe seems to have gone away pretty quickly, Thomas. What are your thoughts on that?
Indeed, the situation in Europe is more, I think, getting more challenging, especially in the south of Europe. I think we're getting some bad news out of Spain, but also from the UK, for instance. And on top of that, you still have this Brexit Damocles sword over Europe, and I think that's a key challenge, because if we get no deal, I think that could be a threat to European growth in next year. So you're right to point out that the recovery in Europe is fragile, and what you're seeing in Europe is also a strong acceleration in new coronavirus cases. So that could weigh on business confidence, on consumer confidence, and weigh on the recovery as well. So the question is, who's the worst in the recovery? Probably at this stage, Europe is probably the worst. Yeah.
Yeah, but what's the run rate here of all these different GDPs? I mean, are you just modeling in your head that we're going to recover and go at 80% of what we were doing in January, or is it 70? I mean, do you have a number in your head where that markdown is on the run rate?
So, the good thing about the U.S. is that there's been a strong fiscal stimulus in the spring, and that has really helped the recovery. I think in Europe, the fiscal programs have been less powerful and less ambitious. So that's point number one. Point number two is that the U.S., I think, will go back to pre-crisis GDP levels by Q1 2022. That's much faster than in Europe. I think you should wait until late 2022, if not 2023, to recover the pre-coronavirus levels. So As usual in Europe, the recovery from a crisis in Europe is always slower than in the U.S.
Right.
Now, having said this, it doesn't mean that the U.S. could still grow more faster, and that would need more stimulus, I think. Everywhere, actually, economies need more stimulus.
What's the unemployment rate in the United States? We're making news day to day here on all these single-digit numbers, and yet, Thomas, people say, no, forget about it. It's near double-digit or true double-digit. What is it?
No, I think the official unemployment rate is actually quite fair, but it's high. I mean, we're nearly at 8% in the U.S. We're below 4% going into the coronavirus crisis. So what you've seen is, I think, this coronavirus crisis is leading to an employment shock of around 3% of the labor force everywhere. Actually, you see that in the UK, for instance, where the unemployment rate could rise by around 3 to 4%. And in the US as well, I think we're settling in this 3 to 4% increase. And that's due to, people working in services, in leisure, hospitality, tourism, travel. Those people are being affected for the foreseeable future, and that's the damage to the labor market. Let's hope that we don't have spillovers into other sectors. So far, that's not the case, but I think there's also a risk now that there are spillovers to other sectors. I think what I'm fearful of right now is firms. I think firms may be starting to cut on capex, and that would be definitely a negative for growth going forward if you saw firms starting to cut on capex due to lack of confidence in the economy and in the recovery.
Well, Thomas, what do you think is the more dominant force? Because there's two issues here. One is consumer confidence, and the other is corporate confidence and capital spending, as you point out. Is it the consumer disengaging because of the fears of the COVID-19 outbreak and the surge in various places and zip codes in New York City, across Europe and elsewhere? Or is it corporations pulling back? What's the bigger concern for you?
Well, I think the problem in the U.S. is that there's also uncertainty linked to the election, so I think that could also weigh on consumer and corporate confidence. I think what you saw so far is that corporate confidence has been actually quite resilient. You saw that in the ISMs, as you pointed out. However, I think it is at risk because firms want to see demand, and if demand starts to evaporate, and then I think that could weigh on investment, and someone else's investment is someone else's demand. So that's, I think, the problem. So I'm going to watch very closely corporate sentiment going forward more than consumer sentiment.
Tom, always smart. Always smart. Thomas Kosterg there, Pictet Wealth Management, joining us on the need for more fiscal stimulus almost universally and worldwide. Tom Keene, a focus at the moment down in Washington as well. Though I've got to say, this just feels like campaigning going to election season more than it does real negotiating taking place in Washington.
I agree with that strongly, and the difference from 32 days to election to 28 days is profound. Imagine where we're going to be 26, 25, 19 days to election as well. Now is the crazy political season. There's just a few other stories going on as well.
Equity market turning around a little bit, up 0.2% on the S&P 500. Talked about the squeeze in the bond market yesterday. Let's get the cross-asset board up and take a sneak peek. I'll run through some of the numbers for you. Your 10-year yield, 0.7851%. Big turnaround. Big turnaround. Tom, I feel like I've been saying 0.65, 0.67 for the last month
Oil brings
or so.
it on.
Get up to 79 basis points. And as crude ticks higher, as Tom points out, up 2 percentage points and change, $40 and about 10 cents from London and New York. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Trump says there's no reason to fear the coronavirus that has killed more than 210,000 Americans. The president has been released from the hospital where he was treated for the virus. A White House doctor says he may not be entirely out of the woods yet. The president will receive further care over the coming days. President Trump intends to be ready to debate Joe Biden next week, despite just being released from the hospital. That's according to Trump campaign spokesman Tim Murtaugh. But Murtaugh says the campaign will not agree to the moderator being able to mute the candidates when their time has expired. That could prevent the kind of interruptions that marred last week's debate. And the CDC says the coronavirus can spread indoors through the air beyond 6 feet. That's guidance that could now pose new challenges for schools and businesses that are trying to reopen safely. The CDC's update says the virus can spread through particles that linger in the air and infect people separated by distances that had been considered safe. The Supreme Court has reinstated a Republican-backed requirement that witnesses sign every absentee ballot in South Carolina. Democrats argue that will make it harder for thousands of people to vote. The ruling will not affect absentee ballots that have already been cast. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Live coverage of the vice presidential debate. That starts on Wednesday night at 8:30 p.m. Eastern Time on Bloomberg Television and Radio.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Economic recovery has been, pretty good. In fact, it's been a little quicker than I was expecting back in June when I submitted a forecast. I had been, quite nervous about, there's a normal recovery where we get back to the level of where we were going into this, sometime, in 2022 maybe, and then, we seem to have been doing better than that.
Charles Evans, the Federal Reserve Bank of Chicago president, sitting down to talk with Bloomberg's Michael McKee in the last 24 hours. Coming up a little bit later on Bloomberg TV, looking forward to catching up with the wonderful Lisa Shallett, Morgan Stanley Wealth Management CIO. We'll do that in around about an hour. We'll talk about the politics as well, Tom. Let me leave you with this one. It comes from Suffolk University USA Today poll on Florida. It has the former Vice President Joe Biden and the President of the United States tied, Tom, at 45-45. Yeah. We talked about the national polls in the last couple of days. These are the ones that really matter to a lot of people. The swing states, Florida, 45-45.
The Hispanic vote and the Cuban vote down there, very, very important, as well as we talked to the gentleman from the 6th Congressional District moments ago. 6% undecided, John, and you've got to really believe he thinks a little bit of TV money will be spent on that 6% undecided. We will have to see.
Tom, just a little bit.
Just a little bit, like gazillions of dollars. John Farrell, thank you so much. Futures up 6, Dow Futures up 140. Right now on what to do with the market, what to do going forward, Barry Ritholtz joins us with Bloomberg Opinion and also with Bloomberg Wealth. This is a new Jed Sandberg project here at Bloomberg. It is trying to do personal finance where, A, here's the advice of what to do, but just as importantly, what not to do right now. Barry, what is the number one thing to not do given the cacophony of news?
You know, don't get sucked into the maelstrom. Understand that minute to minute, hour to hour is not relevant to what you're saving and investing for. If you're 40 years old or you're not retiring for another 2 or 3 decades, who cares what happens on a Tuesday at 8 a.m.? It's just not relevant. People live in the moment. It's very hard to think in terms of decades.
The hard part about this, folks, I'd say, is a lot of people learn over years and usually learn by enjoying losing money that it's okay to stay up with the news flow and the zeitgeist, but you've got to keep in mind long-term investment. Barry, how do you balance that? How do you stay in the zeitgeist, stay current, but push it aside when you look at investment and not speculation?
Right. I love what the brilliant Howard Marks says. Experience is what you get when you don't get what you want. So one of the ways to not fall prey to that is to have a financial plan that accommodates your short-term, day-to-day, monthly budgeting needs, as well as what you're saving for. And that could be anything from generational wealth transfer on the upper scale of income and wealth to simply things like paying for kids' college and being able to retire comfortably. As long as you have an understanding of what you're working for, and software today is so great, you can map out to a high degree of confidence what the world is going to look like if you do A, B, and C over the next 30 years. You can have a sense of exactly what you're going to be either leaving your kids or leaving your foundation or being able to spend in retirement. It's really important to think and plan so you understand exactly what you're getting into.
Barry, I still think that probably is the quote of the year of 2020. Experience is what you get when you don't get what you want. We're all getting a lot of experience this year. This is a key question, though, to be having on in 2020 when yields are going to nothing. The 60-40 portfolio, a lot of people are saying, is dead, and a lot of people with money to spend are wondering whether they should just allocate all stocks and then perhaps a little bit of cash in their mattress. Is that accurate? I mean, is the 60-40 portfolio dead?
No, it's not dead. And here's the problem with it. I know a number of people have been advocating all stocks. And if I'm a mutant, if you're a mutant and the market going down gets you excited, if in like March 09, you're like, I can't wait to roll in and buy, that's fantastic. But 95% of the population instead has a horrible time. And market bottoms are made through a process called capitulation, which technically means surrender. When you look at the lows made in either March of this year or back at the end of the financial crisis in 09, that is a whole lot of panic selling. And if you're in a 60-40 or a 70-30 portfolio and the market's down 40%, well, you're down 20, 25%. It's annoying, but it's not brutal. If you're all cash in March 09, you're down 57%. People can't live with that. The optimal portfolio isn't the one that's performing best. It's the one you can sleep at night with.
Okay, fair enough. And a lot of us are not mutants. Some of us perhaps are. There is a question, though, of whether bonds are the best ballast, right? I mean, maybe that there should be a little bit more gold or something else, given how low yields are, given where inflation is expected to go. It just seems like there isn't that much upside, no?
So there's a couple of things you could look at if you want that ballast. One are things like preferred equities that have a yield. Another is tilting your equity portion of your portfolio towards higher dividend payers. They tend to be less volatile. They tend to offset the lack of yield that we're seeing in bonds. One of the most interesting debates that are taking place these days is, should the 60-40 portfolio be something more like 30-30-40, where you're rolling in some form of private equity or some form of alternative investment, assuming you could select a good one, assuming they'll let you in, and assuming you could keep the prices relatively low. I think that's the most fascinating debate that's taking place with 60-40, alternative asset classes that perhaps provide diversification and maybe create a little bit of yield and performance, but the jury is still out on that.
Really? Barry, are the New York Mets an alternative investment?
No.
If you watch Seinfeld on 60 Minutes this weekend, he was asked if he was going to bid for the Mets, and he said, sitting in a seat with a hot dog and a beer, that's peak baseball. I have to agree with him, unless you're like someone like Stevie Cohen and you have more money than you could possibly spend in a lifetime. Hey, I hope Cohen not only buys the Mets, but buys the Knicks and starts bringing some winning back to New York. We could use it.
Yeah, well, the New Jersey, we were talking to the governor of Jersey, the New Jersey football teams, Eagles, Jets, Giants, 110-1 or something.
Lots of experience.
It's about the
Good
Northeast,
experience.
folks. Barry, thank you so much. Barry Reynolds with us with Bloomberg Opinion. And I should point out as well with enthusiasm, Bloomberg Wealth, we're rolling this out as sharp as we can. Futures up 6, down futures up 137. Lisa, oh, the humanity of the bond market. The loss is taken.
Oh, the humanity of a 30-year yield. It is the highest since June. Let's save that. And it's actually ticked up. It started the day down 1.5967% to go the 4-digit full Tom Keene treatment there. The humanity. I don't know. What are we going to do with 1.6% 30-year yields?
The guy years ago said to me that I've never known of a bear market in bonds. I was like, okay.
You call this a bear market? Is that what you're saying, Tom?
Bear market. It's gloom. Coming up, less gloomy. Julia Coronado, Macro Policy Advisors, later today. This is Bloomberg. Good morning.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London for our audience worldwide, good morning, good morning. This is the Countdown to the Open, and the Countdown to the Open starts right now. 30 minutes away from the opening bell with equity futures up 6 points. We advance 0.2%, and we begin with a big issue. The market considering a Democratic sweep.
Biden opening up a pretty large lead.
The likelihood of a Joe Biden win.
The possibility of a Biden victory.
Given how the polls are going.
Biden leads so considerably in the polls right now.
If you do have a clear winner on election day,
what the markets want to avoid here is a close election.
Then we take a lot of risk out of the Treasury market.
The market is thinking about some of the consequences of a Democrat administration.
Very large fiscal stimulus.
Infrastructure-related stimulus.
Any kind of blue sweep is considered to be probably very positive for a few areas of the economy.
With 28 days remaining until the U.S. election, the numbers continuing to move in Joe Biden's favor. The former vice president widening his lead to 16 points, according to a new CNN poll conducted through the first 4 days of October. On the latest, let's bring in Kevin Cerulli for more. Bloomberg chief Washington correspondent joining us from Salt Lake City, where the vice presidential debate is set for tomorrow night. Good morning to you, Kevin.
Good morning, Jonathan. There needs to be some type of seismic shift in the dynamics of this race if President Trump wants to change the trajectory of what's in the polls. Now, of course, President Trump returning to the White House yesterday and trying to reset. Take a listen to what he said.
Don't let it dominate. Don't let it take over your lives. Don't let that happen. We have the greatest country in the world. We're going back. We're going back to work. We're going to be out front.
It comes as the coronavirus has spread among staffers as well as senators that are even on the Senate Judiciary Committee. Of course, that's the confirmation committee hearing for Judge Amy Coney Barrett to the Supreme Court. Meanwhile, the president also continuing negotiations. Secretary Mnuchin reportedly will speak with Speaker Pelosi on Capitol Hill later today to continue talking about stimulus. He's in need of a win, and he might be able to get it on the stimulus front, but all eyes on Salt Lake City tomorrow when Vice President Mike Pence, who has led the president's coronavirus task force, is going to be debating Senator Kamala Harris. There are two key issues here, the coronavirus, but also the politics of this. There's a lot of uneasiness coming from the debate commission. The New York Times reporting earlier this morning that they are actually even considering next week's Miami debate going virtual, something Republicans and President Trump say, no way, they don't want to see that happen.
Kevin, I think we'd all like the focus to shift to policy and get away from the fighting of the last week or so. Just to reflect on the numbers at the moment. Yesterday we had a poll from NBC, 53-39. This morning we have a poll from CNN, 57-41. That's the national polls. They get the attention, of course. Florida, USA Today, out in the last hour or so, Florida 45-45. Kevin, the challenge for many market participants right now is to understand just how tight this race is. How tight is it?
Well, in Florida, it's a toss-up. In Wisconsin, Joe Biden seems to be having the upper hand. Ditto for Michigan, ditto for Pennsylvania. And then I, of course, am also tracking the down-ballot races. You look at a race like North Carolina, Senator Tom Tillis, a Republican incumbent in North Carolina, polling neck and neck with the Democratic challenger Cal Cunningham. That race increasingly intensifying, growing more volatile. Senator Tillis, one of the senators who has contracted COVID-19. You look at the dynamics of all of these Senate races of South Carolina, Iowa, and that's where things get incredibly interesting, and whether or not there will be a sweep. Look, Democrats would have to have an incredibly strong showing on November 3rd in order to take back control of the Senate. I'm not sure, based upon my reporting, that I can tell you Democrats are fully confident that that's what's coming, but they view it as an opportunity, and that's something that has shifted dramatically in the last 3 to 4 weeks.
Kevin, great to catch up as always. Looking forward to catching up with you tomorrow as well ahead of that debate. 26 minutes away from your opening bell, the shape of things as follows. Cross-asset worldwide, equity futures drifting higher on the S&P 500, up 0.2%. In the bond market, your yield 0.7851%. That's where things came alive in the last 24 hours. The economic data doing okay. The momentum in the ISM, therefore, all to be seen. And the president's health also looking better relative to where it was a week or so ago. On top of that, the expectations, perhaps, relative to, once again, where we were a week ago, that maybe Joe Biden gets that sweep. And that is why we started to see Treasury yields drift higher in a bigger way. BlackRock's Mike Pyle expecting the election to be significant for 3 key sectors. He writes the following: we believe simplistic narratives about the overall market direction are best avoided and see the biggest election-related implications playing out within asset classes and sectors. We zero in on energy, tech, and healthcare. Mike joins us right now. Mike, just build on that, if you can, for us. It's important stuff. Why those sectors?
Yeah, so obviously we've seen sector moves be extraordinarily important this year in terms of the relative moves within the equity market. Obviously tech leading the market higher, charging ahead, energy, of course, a laggard. You know, we think that those sector level stories are going to be extraordinarily important as we roll the clock forward as well, but perhaps in a slightly different way. You know, take, for example, a sector like tech. You know, in that Democratic sweep scenarios we've talked about, we think there's some pretty significant headwinds to the mega caps out there around tax and regulatory policy, including antitrust. But that secular tailwind to tech remains. And so we're looking for other opportunities down the capitalization stack in tech to places like semis and software. Those within sector moves are going to be increasingly important in our judgment.
Mike, everyone is drawing a line from the election, the politics, the policies, to the equity market. We've seen it from JP Morgan. They write the following, quote, a potential Biden victory would end up a positive for the market with likely better trading thereafter and in fact lead to an internal rotation. Goldman Sachs, Biden could have a modestly net positive impact on S&P 500 profits. The largest opportunities are within equity, with cyclicals likely to outperform defensives and value to outperform growth as well. Mike, do you disagree with any of that? Is everyone on the same page about this?
So I think there's a lot there to agree with. I mean, we've been saying for some time, including back in the summer, when a lot of the conventional wisdom was focused on the potential tax policy changes in a Democratic sweep scenario, pointing out the potential headwinds to corporate earnings as a risk negative for markets. We thought that ignored, as you're hearing from some of those other analysts now, the likelihood for greater predictability on foreign policy, for very substantial both stimulus and public investment to really lift the top line of corporate earnings in the economy overall. And so that to us has meant it's a much more kind of puts and takes situation with the overall equity market than was the conventional wisdom just a little bit ago. And then we very much agree that we think the rotation within equity markets is perhaps the biggest story coming out of the election. Again, in much the same way we were talking about just a moment ago with tech.
So, Mike, I just want to draw a distinction on a couple of things because I do think it's significant. There is a difference between a position squeeze and a durable move over time, longer than, say, a couple of months, 3, 6, 9, 12, multiple years. I do wonder at the moment, the key risk that many people have come on this program and discussed is that we won't get a winner November 4th. If we have an event which ends up with a somebody, then of course we'll get a squeeze. We'll squeeze some of these positions. I think we saw that yesterday in treasuries. But it's only on November 4th when we wake up and think about the policy do we start to think about durable change. And I wonder, Mike, whether we confuse a squeeze in positioning, which may end up in some of the moves you're discussing, with something that's durable, a trend that will last into 21, 22. There's a key distinction there, Mike, and why are you confident it will be the latter and not just the former?
So I think that's exactly the right distinction to be making. And I think another distinction we would draw is between a growth to value rotation, which I think we're relatively skeptical of for exactly the reasons you articulated around, that's happened, but it's been fleeting, and something more like a large to small rotation. And I think that's the sort of thing we could expect to see more durably, particularly if we see a Democratic sweep scenario, particularly if we see that big fiscal policy push combined with some of those headwinds at the mega cap level. That's the type of rotation that to us that looks more durably in the cards. But we would agree with you, if you're just talking growth to value, where a lot of the conversation has been, that has the risk of being just a squeeze.
Mike, where do higher taxes fit into all of this?
Yeah, so I think that in a Democratic sweep scenario, you would likely see significant tax policy change. Of course, that would be very unlikely in the other election scenarios. We think that would likely happen. The corporate rate moving from 21 to 28, very likely. Even more likely, a set of international tax policy changes that would probably particularly hurt some of the large tech and other firms that situate a lot of their profits overseas. So we do see both at the overall index level and particularly in some of those tech and pharma names, real headwinds on the tax policy side around the bottom line. But again, our kind of point is pay attention to the whole picture, pay attention to the top line impacts as well around stimulus, around greater predictability. And there we think it's a very balanced picture that's more about rotation than the overall index.
Mike, great to catch up, as always. Got to continue this conversation going into the election, just 4 weeks away. Mike Powell there of BlackRock. In your equity market, futures up, almost session highs, up 8. We advance around about 0.25% on the S&P 500. From the market desk, here's Bloomberg's Abigail Doolittle.
John, standing out this morning is the healthcare sector, and one mover in particular, or a few movers that are really popping higher, Pfizer and BioNTech, the combo in terms of their vaccine around COVID-19. An EU regulator has started a rolling review of their experimental vaccine, potentially speeding the treatment's assessment and reducing its time to market. You can see that Germany's BioNTech really popping sharply higher. That stock on the year up 138%. Now, but Moderna earlier had been higher. This as the FDA, tougher regulations around the vaccine has been rejected by the White House, but at this point down about 1%, so some movement there. And then NVIDIA, the chip maker, a high flyer on the year, up 1.7% after the company's CEO recently gave a keynote address. The street super positive, with the CEO emphasizing the shift toward AI. Again, the street very positive, investors too, with that stock up 1.6%, John.
Abigail, thank you. Coming up, the Fed continuing to call for additional fiscal support. That conversation coming up next with PGIM's Robert Tipp. 19 minutes away from the opening bell. Equity futures up 8. We advance 0.2%. This is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I am hopeful that there is going to be more fiscal stimulus, and whether or not, I think I've got, like $1 trillion, which is, not as large as some proposals, but, that does have that effect on the forecast. I think if you take that away completely, then that reduces aggregate demand by quite a lot, and that, means that the road back in terms of employment is going to be a lot harder.
Chicago Fed President Charles Evans expecting a pullback in fiscal stimulus to threaten the economic recovery. Meanwhile, ECB President Christine Lagarde also making the case for more government support to keep the economic recovery on track, saying, quote, "What is critical at the moment is fiscal policies and monetary policies working hand in hand and making sure that we don't have this sort of cliff effect that we would have if measures are withdrawn too quickly." Joining us now is Bloomberg Chief International Economist and Policy Correspondent, Bloomberg's Michael McKee. Good morning, Mike.
Good morning, John. Well, kind of what we've got going on is a synchronized global slog at the moment. There is a recovery, and the third quarter is going to be relatively steep, but when you look around the world, it looks like just about everybody is starting to flatten out. You can see in Europe, the Q3V is starting to flatten out in the major economies there, and Madame Lagarde went on to say yesterday that we are seeing a V, but we're afraid we're going to see another arm of the V. In other words, another flattening on their side. The central bankers never give up, so the ECB is talking about what else they can do, but they're definitely in a policy of diminishing returns, which is why she's pushing for additional government help. There is a danger with that because the $1.8 trillion euro rescue package that they agreed on earlier this year now seems to be in trouble because they can't agree on the ground rules for how that money will be dispersed. Fiscal stimulus news is not good in the U.S. either, as we heard, so expect maybe more from Jay Powell today on that, along the lines, perhaps, of what Charlie said to us yesterday. There are a lot of high-frequency indicators for U.S. economic activity. Here's the New York Fed's weekly activity index. Shows how far we are from normal growth. That'd be 0.0, and as you can see, it was a steep climb and now has flattened out, and so looks like we're going to need some additional help from Washington is going to be the message probably today from Jay Powell.
Michael McKee, thank you, sir. Looking forward to hearing from Chairman Powell a little bit later this morning. ECB President Christine Lagarde speaking to the Wall Street Journal. That interview came out this morning. She said the following: "We stand ready to address the situation as it develops and to calibrate and recalibrate what should be calibrated or recalibrated as needed." Did you get all that? I guess it means whatever you want it to mean, and maybe that's the intention from the ECB this morning. That's the Fed and the ECB talk. PGIM's Robert Tipp looking for the Fed to keep the economic recovery on track and saying the following: "The current state of the recovery is unsettling, particularly when looking at US data and the relationship between income, retail sales and employment. I think the upside-downside risks to the economy in the long term are to the downside. The biggest downside risk in our view is that QE is scaled back." Robert joins us now for more. Robert, why do you fear that QE will be scaled back anytime soon?
I don't think it will, but I think that's the biggest risk. And I think that there's a good balance out there in the economy between people wanting to get out and spend, even though there are all these cases. And so far, the fiscal stimulus has held up. But all the bonds, all that issuance from the governments that's paying for that fiscal is being absorbed by the central banks. I mean, the ECB is doing $2 trillion a year pace. The Fed is doing $1 trillion. They are really mopping up this paper. And if you don't have that, it's going to be a much more difficult environment because the government issuance will be crowding in and things will get sloppy. So I think it's critical that that continues. And I think that's one of the reasons why the rates market in the U.S. is so much soggier than it is in Europe. In Europe, it was much firmer through September. In the U.S., less so. And as you can see, they're steepening here, pricing in triple-digit yields a handful of years from now, which is too high. And I think that's because the Fed, while they're doing the QE, they're already talking about their exit. And so I think they're working against themselves And that's why I bring that up as a risk.
So let's talk about it, Robert, because Cleveland Fed President Loretta Mester was discussing the bond buying program in just the last 24 hours, and she said a line that I think a lot of people have picked up on. I can imagine wanting to shift to longer-term treasuries, as we did during the Great Recession. Now, this market's been asleep for weeks, Rob, and I don't want to get excited about one day's price action, but I do wonder at what point you think this Treasury yield move that we've seen kicking off this week would make the Fed uncomfortable.
Right. Well, I think that her view is, I mean, I'm sure that all of them in some extreme circumstances would take that view. I think the problem is that her view is on the dovish end of the spectrum relative to what the rest of them are enunciating. And the Fed's purchases may not be widely recognized, are very skewed to the front end. So they are not really supporting the back end of the curve. I think one of the risks with the Fed historically, and could be the case right now, is when they get over-optimistic on the economy and the rates go up and they say, you know, that's a really good sign. I mean, we're in here, we're doing all this stimulus and we're buying, but rates going up is a sign that the market thinks the economy is recovering. And it's hard to make the case that the level of rates is holding back the recovery. But I think that if they are really serious about wanting to achieve their inflation target, wanting to avoid long-term unemployment becoming more pervasive, they should not forget how weak the underlying economy was before COVID. On a global basis, in the, across Europe and Japan, industrial production was slumping, and it had been very static in the US. So it was not a rip-roaring economy. So they need to get back towards that full employment. They should be unwaveringly on the dovish end of this. And I think they should be concerned if they're seeing the forward curve price in any more aggressive Fed rate hikes than what's priced in here. And it may seem subtle, but once you're getting into the 5-year and beyond, this market is assuming they're going to lift off after a handful of years. And I don't
Rob,
think
you've
that's
been behind this bond bull market for a long, long time. And every time there's been a backup in Treasury yields, I've spoken to you, your colleagues, Mike Collins, and you'd be a buyer. And I'm looking at things right now, and I'm just wondering if you, Mike, Greg Peters, are thinking the long end is starting to look a little bit vulnerable. Because when I speak to you guys at PGIM, if I ended this interview right now, I'd assume you've changed your mind. Rob, do you think the long end's vulnerable?
You would assume that I've changed my mind. I
would have thought, based on what you've said over the last couple of minutes, that you would think the 30-year and 10-year yields were going higher.
No, I think they just went higher. I think that this is a range trade, and we're probably near the top end of the range. Unless you're going to get a spectacularly large fiscal stimulus post-election that is not going to be well supported by the Fed and ongoing really strong economic growth, you're looking at Treasury forwards on the long bond that are too high. And in the long run, the Fed is going to end up being trapped at zero. They're not going to be going to 2.5% in the next cycle. At the most, optimistic point in this cycle, 5-10 years down the road, I'd be surprised if they got above 1.5%. So I think that we're going to be in a 50 to 100 basis point range. That most of the time when people are taking a level-headed assessment of what's going on out there, you'll probably be in the bottom half of that 50 to 100 basis point range, and that puts us at the top of the bottom half. And so, markets have been very thin. We had that period in June where we spent just a few days higher than where we are now, and then we crashed back down. I think that, we're having a moment of optimism. We have supply coming this week. And as I said, the long end of the market is on its own. But big picture, I think overall the bond market looks very good here. That your global backdrop is yields everywhere else much lower than the U.S. We're not going to be sustainably much higher than where we are now in yields. And there's going to be a lot of conservative money that's going to be supporting all of the credit product. So, on balance, very positive, but it's obviously going to be very shaky. The next few months will be a lot of banging around.
Good job I asked the follow-up question. Rob, great to catch up. You know how it is. One day's price action. People extrapolate it out. 6 months, 9 months, 12 months. Robert Tiff there of PGIM. Coming up on this programme, the analyst action you need to know around the open and bow. Before that, we'll get you the morning calls. And then Chad Morganlander of Washington Crossing Advisors joins us to talk tech and antitrust issues. All of that coming up right here on Bloomberg. Five minutes away from the opening bell in New York City. Beautiful morning stateside. Equity futures pushing higher, up 7. We advanced 0.2%, 3,400 on the S&P 500 futures going into the cash open. That's the price action. Here are the morning calls to look at some of the analyst recommendations on Wall Street this morning. We begin first up with JP Morgan upgrading Advanced Auto Parts to overweight, a 190 price target. The analyst seeing solid and sustainable trends leading into a historically strong winter season. That stock up by more than 2.5%. Credit Suisse upgrading SeaWorld to outperform, street high $30 price target. The analyst more than doubling his previous number, saying the company's major headwinds are now priced in. And your third and final call, Barclays upgrading Costco to overweight, $400 price target. The analyst expecting easier comps next year with robust traffic continuing to show improvement. Three of the calls from the street behind us. Ahead of us, rising concerns about big tech antitrust issues. We'll get to that conversation in Washington with Washington Crossing Advisors Chad Morganlander in just a moment.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds away from the opening bell in New York City. Electoral politics gripping the price action of the last 24 hours. Equity futures up 6, positive 0.2% on S&P 500 futures, just south of 3,400. The national polls very much in favor of the former VP Joe Biden. Some of the swing states, Florida, very, very tight. The USA Today poll this morning, 45-45. I think for many of you, with the experience of 4 years ago, conditioned by that experience, believing this one isn't over yet. 4 weeks to go, switch up the board in the bond market. Chairman Powell will speak in about an hour and 10 minutes. The bond market with a move yesterday. A real move. First time we've seen something like that in about a month. Yields up yesterday. Yields going nowhere today. 0.78% on a 10-year. Euro dollar about 118. As Christine Lagarde speaks on the euro side, talking up, doing more, I guess, if you interpret it that way. And Chairman Powell will speak in an hour. Euro dollar positive about 0.1%. And in the commodity market, a 40 handle, $40 and about 50-odd cents, up by 3.4% on WTI crude. That's the cross-asset price action this Tuesday at the market desk with your movers. Here's Abigail.
John, certainly an interesting divergence that you highlighted there between the Dow and the S&P 500 outperforming the NASDAQ. That has everything to do with big tech being under some pressure today, of course, as there are continued fears of some sort of regulation or breakup around tech. We see the likes of Alphabet, Amazon, along with Facebook and Apple all lower. This could also be a little bit of a give back of yesterday's big rally. As for where the rally is today, you were talking about that big backup in yields yesterday. Today, the banks are higher in sympathy with that move yesterday, even though today, as you mentioned, yields are about flat. And you see JP Morgan, Bank of America, Citigroup, and Wells Fargo also nicely higher. Goldman Sachs not on that board, up more than 1%. The top mover for the Dow. I know that's not an index that you love, John, but there is that outperformance, and certainly the banks a piece of it, at least today, John.
I'll just pretend you didn't reference it. Abigail, great work, as always. 2 minutes into the session, the S&P 500 up about 0.1%. Abigail pointing out energy outperforming, materials, financials as well. Keep going back to this. There's a big difference between a position squeeze and something more sustainable. And if you really think about the policies that could or couldn't come from any given administration, think about who the leading candidate is at the moment to become the Treasury Secretary in a potential Biden government. Governor Lael Brainerd. What did Governor Brainerd do in the last couple of weeks? Dissented. Didn't want the banks paying out dividends. Didn't want the banks doing buybacks. I think it's too early to say with confidence and conviction what any set of policies is going to look like from any potential administration. That's the story at the moment in politics. Here's the one right in front of us for big tech. A House panel considering sweeping reforms to break up big tech. Bloomberg's Scarlett Fu joins us now for more. Hey, Scarlett.
Hi, John. Yeah, big tech may have the market cap and, of course, the earnings growth to support its influence in the stock market, but it doesn't have a whole lot of political cover. A House panel is wrapping up 15 months of investigations into Google, Apple, Amazon, and Facebook, and was scheduled to release its conclusions today, but reports of last-minute information on Facebook is delaying that. Now, here's what it's likely to contain: a specific proposal to ban these companies from entering different lines of businesses. So, for instance, Amazon would not be allowed to sell its own products on its marketplace, ditto for Apple apps and its App Store. Now, other recommendations would include legislation to shift the burden of proof in M&A cases to tech companies, so preventing Facebook from taking over future Instagrams. The goal here is to reduce their dominance and create competition. Google currently controls 87% of searches in the U.S. Apple has almost half of the smartphones in the country. And we got hints of all of this when the CEOs were called to testify before this House panel back in July. At the same time, federal and state regulators continue to build their cases against the companies. We've heard how the FTC is preparing to possibly sue Facebook. Now, this regulatory overhang not really limiting tech stocks' performance or their gains. The sector outperforming the broader stock market by the most since 2000 when you look at the relative strength. Except that since the dot-com bubble days, the biggest tech names are throwing off more cash than ever, and they're increasingly using it to buy influence in Washington to get some political cover. The Big Four spent a combined $54 million last year. That is more than the pharma industry, which is traditionally one of the biggest spenders in Washington. And so far this year, they've put in another $27 million. John?
Scarlett Fu, thank you. 4 minutes into the session, a big issue to get our hands around. The Nasdaq with just a little bit of underperformance, down by about 0.12%. The S&P 500 flat. Washington Crossing advisors Chad Morganlander favoring a rotation into value. Running quote, "We are positioning our portfolios 12 months out. Our base case is that the pandemic will be close to over. We prefer value over growth and would buy healthcare and industrials." Chad joins us now. Chad, help me with this. You're positioning for a life after COVID. I want to get there with you. Does it look any different to life before COVID?
Well, you know, look, you're going to have a tremendous amount of fiscal stimulus in 2021, and we would anticipate 2022 with a major amount of deficit spending across the globe. Healthcare as well as industrials, if the global growth pattern starts to improve over 2021, industrials could do very well. From a historical perspective, the valuations are somewhat low in relationship, for example, to large cap tech, as you just reported. So overall, we would just start to balance out one's portfolio. We're not saying that you should sell all of your tech stocks, but there are other seams of opportunity as we start to see some stabilization within the global economy.
Well, let's talk about balancing things out beyond materials and industrials and potentially into financials. The Treasury yield curve move in the last 24 hours, breathing some life back into some of the big banks on Wall Street. Chad, I keep going back to this theme in the last hour. Do you think what we're seeing is a bit of a squeeze, a position squeeze in treasuries that's flowing into something that's been unloved through much of this year, or the beginning of something else, something more sustainable?
Well, I think that it's a little too soon to make that statement that it's going to be sustainable. If your base case, like ours is that the U.S. economy and the global economy over the second half of 2021 will improve, then you could see a steepening of the curve on the 10-year, where the 10-year starts to march towards 1% and a little bit past that. The Federal Reserve will continue to be quite dovish, as you have reported, over the next several years, and inflation can start to improve gradually over the course of the next several quarters.
You've got to believe that the trajectory of this recovery is different to the trajectory of the recovery of the previous 10 years, Chad. Do you believe it will be?
Yes, because I think there's a pent-up demand in regard to consumption, business investment that has been held back, and you're also getting the other two situations, which is monetary and fiscal stimulus, will be quite dovish over the course of the next 9 to 12 months. So, you know, look, the financial, we would recommend that investors start to layer on risk in the financial sector, in the industrial sector. We think that multiples there are somewhat compressed, and we would advise investors not to become overly pessimistic going into this election cycle. We believe that investors should balance out their portfolio and not be overweight technology at this inflection point, as you could start to see a subtle shift out of that sector.
Chad, great to catch up. Chad Morganlander there of Washington Crossing Advisors on this market. Equities unchanged on the S&P, slightly negative on the Nasdaq, at a market desk with your movers. Here's Abigail.
John, let's take a look at the shares of Boeing, or at least start there, because the stock is popping higher. This after Credit Suisse is becoming tactically positive. They've raised their price target to $184 from $154. So also a bit of housekeeping. Longer term, though, the analysts are saying there's lots of challenges, neutral. So again, a near-term call to the upside. As for some of the travel and leisure movers, Carnival and United Airlines popping. This perhaps, as President Trump has, of course, downplayed the risk of COVID after emerging from the hospital. So we're seeing some strength there. Lots of talk out there on this space, popping on that idea. And then Macy's also higher, up 1.3% after they have invested in a Swedish buy now, pay later. Investors seeming to like that. Whether or not that works for the long term is to be seen, but on the day, Macy's is up. John.
There we go. Thank you very much. Coming up, how many times have I said this in the last couple of weeks? House Speaker Nancy Pelosi, Treasury Secretary Stephen Mnuchin preparing for, guess what, another day of stimulus negotiations. Lucky Lisa Shallett of Morgan Stanley. She gets to weigh in on that. Love catching up with Lisa. We'll do that next on this program. Equity's shaping up as follows. About 9 or 10 minutes into the session. 1 hour from now, you'll hear from Chairman Powell. Equity futures were pretty negative, then positive going into the open. Coming out of that, the cash open 10 minutes in, dead flat on the S&P. At least the sun is shining. This is Bloomberg.
'Crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
12 minutes into the session, your equity market looking a little something like this. Down a tenth on the S&P, down 3 on the Nasdaq, off by about 0.28%. Big tech underperforming again. The S&P 500 negative just a tenth of 1%. That's the price action. Down in D.C., House Speaker Nancy Pelosi and Treasury Secretary Stephen Mnuchin preparing for one more day. Let's call it a second day of stimulus talks. It might as well be 1,000. Partisan divides remaining despite President Donald Trump's push to strike a deal during his recent hospital visit. Nancy Pelosi continuing to put the onus on Republicans, saying, quote, "It depends on if they really want to crush the virus, honor our heroes and put money in the pockets of the American people." Senate Majority Leader Mitch McConnell is still silent. Chief of Staff Mark Meadows continues to underline the dispute.
There are a lot of people that continue to hurt, are waiting on stimulus, and the president's committed to getting a deal done, but he wants to make sure that we move expeditiously, but also in a fiscally responsible manner.
For more, let's bring in Bloomberg's Kayleigh Lyons. Good morning, Kayleigh.
Good morning, John. Well, I guess the good news is the two sides are still talking. The bad news is there is still no deal. A wide gulf remaining between the $2.2 trillion proposed by House Democrats and the $1.6 trillion proposal backed by the White House. Nancy Pelosi, the Speaker of the House, has outlined significant areas of disagreement and reportedly, according to Politico, told Democratic leaders on a conference call last night that things are moving slowly. But there is, John, pressure to get a deal done. All you really need to do is look at the economic data to see that a disappointing 661,000 print on payrolls on Friday. And when you look at permanent job losses, those are climbing at a faster pace than during the Great Recession, now at the highest since 2013. Whether it's data like that or his illness, the president himself pushing for a stimulus deal, tweeting, quote, "Get it done" from the hospital at Walter Reed over the weekend. And of course, as a result, markets are pricing in more of a chance that stimulus gets done. They see it likelier that the White House will come closer to Nancy Pelosi's proposal. A rate strategist over at NatWest saying that the momentum continues to be in favor of pushing the size of the package higher. And more stimulus thinking showing up in the rates market yesterday. Yields on the long end surging, the 30-year yield up near a 3-month high at 1.6%. And the curve steepening, of course, taking shape. That 530 spread, what we're looking at here, now above 125 basis points. Now, stimulus isn't the only part of that equation, John. The election is as well, and I want to point to some commentary over at JP Morgan. The strategists there saying they have been long growth and defensive names, but then they are thinking about shifting that post-election to the likes of energy and financials. They say that is because of an increased political clarity, perhaps after the November 3rd election. The market's thinking it's more likely that Biden will have an easier and decisive victory. But the other things JP Morgan pointing to, John, potentially more positive news on the COVID front and then additional stimulus. John.
Kelly Lyons, thank you very much. Great work as always. That's the wrap on Washington, D.C. at the moment. Some news just coming through from the New York Times that the president is considering giving a nationwide TV address at some point today. That's a consideration. Not confirmed just yet, but reportedly a consideration at the moment for this administration. Morgan Stanley's Lisa Shallett writing, quote, "Most recession playbook indicators have held up during the COVID-19 downturn. The one that hasn't behaved by the book is the yield curve. This suggests to us the potential for a loaded spring sell-off in the long-duration treasuries when the election outcomes are clarified." Lisa joins us right now over the phone. Lisa, great to catch up. Is that what we saw just yesterday, just a flavour of what you're describing? I don't hear Lisa Shallett, so either there's a problem on my side and I can't hear her, or a problem with Lisa Shallett's line, and hopefully we can readjust and reconnect in just a moment. I understand that we do have Bloomberg's Abigail Doolittle at a market desk to get you some of the sector price action this morning. Hey, Abigail.
Hey there, John. Well, sector-wise, we are looking at a little bit of a mixed picture here. More sectors are higher than not, but basically all sectors are flat, not surprisingly, given the fact that the S&P 500 itself is flat. A number of these sectors barely moving by a couple tenths of 1%. Up top, though, clearly the big winner is energy, up 1.6% in sympathy with crude oil rising. Financials also higher, this even as yields are about flat today, as you've been mentioning, but yesterday that big backup in yields, bonds selling off the most since the end of August. Financials are rallying in sympathy. Now toward the bottom, the stay-at-home stocks, the tech stocks, the mega caps, as there's some fear that there could be some regulation or at least talk of it. Interestingly, John, over the last 3 days, we've seen something that we have not seen since early August, and that is this rally that you were mentioning earlier for the energy sector. Take a look at that. The S&P 500 energy sector up 5.6% over the last 3 days. That's the best 3 days for energy going back to the middle of July. All of this as crude oil has basically been dropping since its last peak in June. But right now on the 10% rally for crude oil over the last 2 days, John, energy finally getting a bid.
Abigail Doolittle, thank you very much. I understand that we've lost the connection with Morgan Stanley's Lisa Shallett. That's unfortunate. Hopefully we can rebook Lisa and get her back on the show very, very soon. I'm looking forward to that. For the political implications on this market, I think it's absolutely key right now to draw a distinction. We've tried to do that through the last 50 minutes through an event that would drive durable change and an event that would just squeeze positions. And if we think about the risk at the moment on the horizon going into year-end, it is most certainly around a contested election. So what would squeeze that position? The very fact that somebody wins. Now, I think it's important not to conflate the fact that somebody might win with the potential to start pricing in the policy changes. They're two different events. And right now, I think we're conflating both of them. I do understand that Lisa Shallett of Morgan Stanley is now good, and we can connect back with her. Lisa, fantastic to have you with us on the show. Let's just start with what I was discussing. Events that drive durable change and events that squeeze positions. There's a huge difference. Are we pricing in an event that squeezes positions or an event that could drive some durable change at the moment when we focus on the election and the result November 4th?
Look, our position is that we're really looking at a rotation and durable change, that we're starting to, fundamentally recognize that on the other side of election clarity, we are going to get stimulus. We are going to have an accommodative Fed that is focused on inflation and reflation. Essentially, we're looking at an economy that in 2021 is likely to grow reasonably robustly with annualized GDP at 5 to 6%. Our sense that this compression in the yield curve and this anchoring of the 30-year, as you said, is really a loaded spring. And once we get some certainty, we're going to start seeing some pretty significant steepening, which is advantageous for, some of the stocks we talked about this morning, the cyclicals, the small caps, international, and those that are levered more to an acceleration in economic growth.
Lisa, just to build on the policy agenda down in Washington, it seems to me that everyone is embracing the likelihood of fiscal stimulus from potentially a Democratic sweep, but thinking very little about the potential for higher taxes. Why is that?
Well, I think that the view is really one of the sequence of events, right? And I think that any new administration, regardless of who wins in November, is going to be focused on getting this economy to exit the recession, which suggests to me that job one of any kind of new administration is going to be getting the care stimulus done, wrestling the virus and a vaccine rollout to support.
I think we've got some problems with Lisa Shallett's connection. Lisa, I apologize for the technical issues on our end. We will have to get you back on the program soon. With the market-moving events you need to be watching, we'll do that next in our trading diary. The price action at the moment shaping up as follows. If we can get to the market board, I'll run through things for you. Your equity market looking a little something like this. On the S&P 500, down 0.1%. It's the story of the moment. The cyclical parts of this market outperforming. Big tech, the NASDAQ, down by 0.4%. It's the chat of the moment, the conversation. Is this a position squeeze or the start of something more durable? And will it be actually backed up? Will it actually be backed up by policies down in Washington? Is it still too early to start saying with conviction and confidence what that looks like in the coming months and years? If you could get to the other board before we get to that beautiful shot of New York City, I can run you through the bond market and foreign exchange as well. A bit like magic, but we can just bring that up. There we go. Yield 0.77% on a US 10-year. Three reasons for this over the last couple of days. The data decent in the United States. The ISM doing okay. The president's health seemingly improving. That's good news according to his doctors. That's helped give Treasury yields a lift. On top of that, it's all about the polls, isn't it? The national polls seem to be indicating a big win for former VP Joe Biden. CNN had him at 57.41. NBC had him at 53.39 yesterday. The state polls, Florida, 45-45, so maybe things are tighter. But one thing you can take away is the clear asymmetric risk around treasuries over the last couple of months. When we have risk off, we don't get much of a rally. When we have risk on, like we did yesterday, we get a fair bit of a sell-off in the treasury market. So that's treasuries and foreign exchange. Keep an eye on euro-dollar, 117.90. The ECB President Christine Lagarde talking up a little bit more action, maybe, if you read between the lines. I guess it starts with the view you've currently had, and then whatever she says supports that. That was in a Wall Street Journal this morning. Later, in about an hour from now, 50 minutes, you'll hear from the Fed Chairman, Jay Powell. So there's the price action. I've run you through the price action, and now we can get to that beautiful shot of New York City and an equity market doing a whole lot of nothing. Up next, I'll run through the trading diary right here on Bloomberg TV.
would you say are the leadership qualities that you brought to the table or that you most admire?
I don't always have to be the smartest person in the room. I know collectively what a team needs, and I love having really great debates.
Caught up with Ed Mills of Raymond James in the last couple of hours. This is his quote, not mine. What a year last week was. I know how many of you feel, given the last couple of weeks we've had in this market. Your S&P 500, 25 minutes in, down around about 0.2%. The Nasdaq is where the underperformance is. It's where the story is this morning as well. Down about 52 points and negative about 0.5%. That's the price action. Let's get to the trading diary. What you need to be watching through the rest of this week. Coming up within the next hour, Fed Chair Jay Powell speaking at the NABE conference, followed by ECB Chief Economist Philip Lane speaking at 11:30 a.m. Eastern. Compare and contrast Philip Lane with what you might hear from Christine Lagarde a little bit later. Atlanta Fed President Raphael Bostic speaking at 2 p.m. this afternoon. Looking forward to getting the FOMC minutes tomorrow. Can't believe I just said that, but looking forward to see what the divide looks like on the FOMC. I think that's the story of the moment. Story of tomorrow, politically speaking, the vice presidential debate scheduled for later that evening in Salt Lake City. Will we finally focus on the policy after the fight of last week and ahead of potentially another fight in Miami, Florida, as the former Vice President Joe Biden and the President of the United States face off again, scheduled to on October 15th. Through to Thursday, another round of U.S. initial jobless claims to round out the data for this week. From New York and London, good morning to you all. This was the countdown to the open. I'm Jonathan Ferro. Follow me on Twitter at Ferro TV to continue the conversation. 26 minutes into this equity market, equities doing a whole lot of nothing on the S&P 500. A little bit of weakness, softness, lower on the Nasdaq. This is Bloomberg TV.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart
when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here. and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jivansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jivansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something It's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.